Top of the morning to you, traders. Anthony Crudele here, and welcome to NinjaTrader Live. I'm joined by a great panel today, live in Naples, Florida, for the launch of NT Live. We have the wonderful, our senior economist, Shy Girl, otherwise known as Tracy Shuchart. I could say Tracy Shuchart, otherwise known as Shy Girl, but we all know you as Shy Girl. And coming down from New York, we have Tanya Trades. Tanya is an independent trader and really one of my favorite YouTubers. She does a fantastic job, and she's just really meeting her in person. She's just fantastic, and you can see why she's so successful at trading. And somewhere deep out west in the Grand Canyon, we don't know where he is. He's totally remote. Is my boy Farm. Farm, how are you, my brother?
You got me up early, Deli, but I'm doing well.
Well, everybody, kind of muted markets so far this morning as we kick off. Today we have St. Patrick's Day. We've got Rollover. What a day to start. Nothing like a Chicago company launching NinjaTrader Live on St. Patrick's Day. We got everybody coming in off the weekend, probably a big party in Chicago. I wasn't there, obviously. I'm here in Naples, Florida. And we've got Rollover. So we got to get set. We got to get ready for the trading day. You know, over this weekend, a couple things came out to me, and we're going to go to Tracy in just a second. We had the U.S. attacked the Houthis on Saturday. I think that was an important headline. It's probably why we gapped down just a little bit initially on Sunday. And then Basen saying he's not concerned about the markets, Shy. And then you were the one who brought that to my attention, and I think that the market is definitely looking at that, but I don't know how closely today with everything muted. But let's start with you, Tracy. Any market moving headlines that we should be keeping an eye on leading into today that will be driving action across the board, and then maybe we'll get into the economic calendar to see what we're looking at for today.
Absolutely. Well, you did mention Trump launched large-scale strikes on Yemen's Houthis on Saturday. They came back on Sunday and said they're ready to escalate after the U.S. Started striking. So obviously, we saw a crude gap up a little bit in the overnight. Not surprisingly, the Houthis been targeting shipping in the Red Sea, and that's a critical route for oil and gas transport. We're also seeing we're pretty much up across the board except for natural gas in the energy sector, which is pretty much what I had expected to happen. Well, we did see gold up in the overnight, flight to safety in this time. We are coming back down a little bit, but still up about 0.46%. What I kind of am surprised about is that we haven't seen the dollar rise, because usually we see a stronger dollar as a flight to safety, and we have treasuries pretty flat. I would have also expected them to be bid much higher. So let's see what happens when the markets open, but you kind of want to be watching US dollar, treasuries, equities, and the energy sector, and of course gold. We'll keep an eye on that all day. And then Besant, yes, on Sunday had an interview and basically said, I'm not worried about the market. He called corrections healthy. He said, I've been in the investment business for 35 years, and I can tell you corrections are healthy. They are normal. So I'm not sure whether this gap really has much to do with that we had in the equity sector. But again, I think we need to see what happens on the open. But it looks like that sort of first term Trump administration put is not there. So I expect markets to be kind of volatile on that. And then coming up at 8:30, we have core retail sales and retail sales, along with New York Empire State Manufacturing Index. Back to you, Deli.
Well, it's kind of ironic that we have gold as the main market for today. We got St. Patrick's Day, right, Tanya? We got. I don't know if anyone noticed we had the shamrock over there right in front of Shaw. I've got my green on today, and not often. I bet you if we went back in all the years that I have been on podcasts and streaming, I don't know that I've ever even worn green before, but I got it for today. We even have the cupcakes. People are asking who brought the donuts, and it's amazing because literally right next door we have an amazing baker, and we got the NinjaTrader logo right on here for cupcakes and cookies, and so we're getting jacked up here a little bit for St. Patrick's Day. But I want to go to you, Tanya. You know, I've been watching you for a while, and what I love about you is you're really systematic and you're well composed. When I watch you stream, I mean, you stay true to what you're doing. You don't veer off at all. I mean, you've got a lot going on in your stream, and I love it. You're just like, no, this is what I'm doing. I mean, you and like I said, meeting you, your character, and I could see why you've been so successful as a trader. We heard from the economic side of things with from Shy Girl. Do you ever really look at macro? Do you ever like come in and go, what's going on in macro, and does that ever help lay the land for what you might do during the day?
Yeah, definitely. If there's like these unexpected headlines that are happening, I then anticipate more volatile action in the markets. Like I'm going to anticipate these 1 minute candles that are going to be like 60 points on at NASDAQ, like we've had recently. Even like 10 a.m. news has been super large ranges. Like I've seen a 1 minute 150 point candle. So I'm basically priming my brain to understand that like I'm not going to get afraid from seeing these large moves, and like being okay with getting into the action, as well as sizing down my position sizing, because I know I'm probably gonna have a wider stop. And also, yeah, with headlines that are unexpected, then I might just wait a little bit and see, let the market do price discovery, basically.
I love that. And so the one thing that I took for that, and anybody who's ever used one of these notepads before, that's a remarkable, this thing's the best. And it's my notes as I'm sitting here listening to Tanya. Adjusting for volatility, I think that's the main thing. I think when people know that there is going to be news, whether it's an existing data point or we know overnight there's a big headline, I love how you said that. And to me, that's an easy way to implement structure from a macro perspective into someone like you who's more systematic in what you're looking at from your system, from your model. And I love that. And I think that's something that all retail traders can take from that. And remember, at the top of the hour every day at 9 a.m. Eastern, Tanya is going to be going to the charts, and we're going to be looking exactly at what she's looking at for the day. But before we get to that, we've got a little bit of time. We got my boy Farm. Let's go to him. Like we said, somewhere deep in the Grand Canyon. We know he's known for his calves. Do you like just put rocks up on your back when you're out there and you're just doing lifts every day to keep those things fresh for all your tweet picks?
I mean, it's mostly from having 4 kids and carrying them and a bunch of groceries around. The legs just have to get massive. So, that's how it happens. Born in the Midwest, have 4 kids and wear New Balance shoes.
At least I can't hear them.
I can't either.
And this is what happens when you only do leg day, everybody. See, now most guys are only doing arm day, but for him, he's only doing leg day. So now all of a sudden when we get Farm's audio sorted out, we'll come back to him. I'm going to go back to you real quick, Shy, when we get Farm's audio sorted out. When we come up today, we've got 2 data points. One of the things that we're going to talk about every day here is making sure that we talk about data points and their level of impact. When people are looking at the economic calendar every single day, today's 2 data points we talked about, what were they again? That we had Empire State Manufacturing, and what was the other one?
Core retail sales and retail sales, which are both kind of, retail sales is a big one, and then New York Empire State Manufacturing is a little less important on the poll.
So what are we looking for from these data points? Are these 2 data points numbers that the Fed is looking at? Do we expect high impact, low impact? What are your thoughts on that?
They are considered high impact for indices. And when you're looking at retail sales, you're kind of looking for the state of the economy. Is the consumer healthy, in other words? We did see previously, we saw a big dip in retail sales last month. And so traders will be looking to see what that looks like this month. If it picked up a little bit, January tends to be a little bit slow because it's after the holidays. But if that does continue, that's going to put pressure on the economy, pressure on GDP, and likely we would probably see a pullback in indices.
So one of the things I want to ask you, and I'll wait to hear from Comms if we have Farm back, but when we look at all of these data points right now, everybody's already talking about this is Trump's market, and everyone's talking about the economy as if it's his already. And we all know when you go from one president to the next, bottom line is, this is your world now, buddy. Welcome to the presidency, right? Are these data points, are any of these numbers that we're seeing maybe today and this week and coming up reflective of anything that Trump has been doing, or are we still kind of in the data points pre-Trump?
Well, we're still getting pre-Trump. I mean, he's only been in office for 60 days. So, a lot of the volatility that we're seeing in the markets obviously has to do with tariffs, but we really haven't seen any economic impact of those tariffs besides market reaction and analysts' projections of what's going to happen. But since those tariffs really aren't on yet, except for the steel and aluminum tariffs, which again, we just really haven't seen the impact of those yet because there was a lot of buying and front running, knowing that those tariffs were coming, because he did say those tariffs were coming. So
yeah. Okay, let's go back and see if we got Farm again. Farm, are you with me?
You hear me okay, Deli?
Still no audio from Farm. We'll get to him at some point. Again, I tell you, everybody, it's funny. It's St. Patrick's Day. The Irish are known for having the skinny legs, and he's got the big calves. I think that they're kind of blocking you out, Farm. They're jealous of those calves. It's like kind of these things that are happening in the background that we can have no control over. Tanya, I'll go back to you. Mm-hmm. I want to give us a little preamble of what we're going to be looking at. I know we're going to do your market prep at 9 a.m. Eastern, but when you get in the mornings, in your mind, what is it, how do you get your mind set? Let's talk a little bit of psychology. It's still early. We don't have data points for a little bit. Walk us through the first things that you're doing in the morning.
Sure. Awesome. Well, if we're just going to go through the routine, I think the best thing you could do in the morning when you wake up is take a morning walk and get that sunlight in your eyes. It sets your circadian rhythm and makes your body wake up, makes your cells wake up in the morning. And gets your energy flowing. It's also good to do a workout. But I typically go for a walk in the mornings to set my tone for the day, basically. And then I come up to the charts. I will start with the weekly, pretty much on Sundays, though. I'll look at the weekly chart. And then when I come in the next day, that should be all set up already. I'm not really looking at the weekly every day because I already charted that. Then I'll look at the daily chart, see where we are in comparison to last night's close, to yesterday's close, or for now, look at the Sunday open. And are we gapping up or down on the day? Then I'm going to look whether or not how we react to those levels, basically, on the gap ups. And then I just draw out my levels, and I kind of put myself in the mind frame of okay, today might be a really large range day. If it's CPI, for example, that's my favorite day of the month to trade.
CPI is your favorite day?
Yeah. I say it, and I'm not afraid to say it. I have a pretty good track record. I think even on my streams, I would say I'm 10 for 13 on green days on CPI, just because I know those days are going to be expansion days. Typically, you're going to have large candles on the daily, and you're going to have a large amount of points from the NASDAQ, right? So then I'm looking at a trending day, or I like to wait maybe at 10 a.m. for a reversal to start the trend of the day. Looking for a manipulation in the morning is always the best for me to then look for a count for a reversal. Because then I feel more confident in my drawn liquidity and us hitting it during that morning. So then I look at the chart and I anticipate these swing highs. If I'm bearish, I anticipate the last swing high is going to be protected, and then I feel way more comfortable taking my trades versus if it's the day before CPI or the day before NFP. Day before NFP, I'm never even really trading because essentially I think the market's building that liquidity and generating it, and to be ran later. So I don't want to be the liquidity there, and so then I'm kind of okay, I'm going to be really, really, really patient on those entries and maybe just switch to the 5-minute on my entries. Typically, I'll enter on the 1 minute or even the 30 seconds sometimes, because I think even on NFP this month, I took a trade on the 15 second on NASDAQ because I just knew it was going to be a large day. I mean, a fast mover during the morning. So I thought like, okay, I'm going to have to get in a retracement on the 15-second chart because otherwise it'll just run without me, right? Versus the day before NFP, I'm going to wait probably on the 5-minute and just wait for being super patient because otherwise I don't really even want to put the risk down, and risk being the liquidity.
I love that. I mean, you're taking the macro and obviously putting it right to the point of position sizing and timing of charts. And so because now let me ask you this is because I think this is another important piece of this. Are you, when you have days that you know are going to be really volatile, are you adjusting contract size because you know the stop is wider versus, okay, so talk to us about that.
Yeah, I think that something that even some of my friends that are a little bit more experienced, they've told me like, yeah, I just positioned 5 micros and I realized that's way too large of a risk for me right now because the stop's like 100 points on the NASDAQ because like 1-2-minute candles have been 60 to 100 points, right? So then they realize, oh no, some people are sizing like 3 micros for a $450 risk now because we've just been large ranges on the day, right? So you have to be careful if you're in this market right now. If you're typically sizing like 1 mini for a 20-point stop, typical, then you're looking now. Oh, now it's a 60-point stop. You have to decrease your size by like 3, unless you're like super confident that you want to take that larger trade. But if you're not, if it's just a regular trade for you, you have to be cognizant of the fact that, okay, my stop's wider, I need to take less contract sizing.
Yeah, I think the most important thing is when you look at adjusting position sizes, everybody, it's about adjusting the position size to the stop, because once you have a wider stop, you have to recognize, like, people think that they're being consistent, Tanya, by trading the same contract size every day, even though the stop is fluctuating. That's not being consistent. And telepathically, I feel like, I don't know, can we hear Farm now? Farm, let's talk to me. Let's see if we've got my boy Farm here. And the thing was, they could hear him on YouTube. I couldn't hear him. I think it's because I'm getting older too, brother.
Okay, so they can hear them.
Yeah. Are we there, Farm?
How about now, Deli?
Oh man, there it is.
You got me?
My boy is back. My boy Blue. He's got blue on too for St. Patrick's Day.
All right.
So bringing you into this conversation.
That's right. You don't want to see me in green.
No, you know what you do? I was thinking, I'm like, he's going to put a Hulk picture out today. Like, I'm thinking of all the things that you do with your tweets. I'm like, he's going to have a big Hulk picture today. I feel it's coming.
That would be fun. I hope so. It's contract roll, so hopefully it's not just a choppy mess of back and forth. But we'll see if we get some excitement today.
Yeah, and so let's start there. So I think when you have rollover, this is another time. Pax is going to be actually in studio later this week. We look forward to having Pax in here. He's a total riot. And Pax and I have always said, when do you go on vacation? Rollover week. I'm actually, we're launching NinjaTrader Live on Rollover Week. It's kind of interesting from that perspective. But typically it's not the easiest because as technicians, right, we're all technical, right? Even though we might look at some macro, we're all need to see what the charts is. And one of the beauty of futures is that we roll over every quarter when it comes to equity indexes. Today is March, but it's roll day. I mean, how do you approach rollover?
Yeah, for me, I do like to take a week to let it settle in. I mean, I'll still trade, but definitely smaller trades than I normally would. I feel like with a new contract, it's kind of like you gotta take her out for a few dates before you give her the calves, So I just feel like every contract is a little bit different, and you want to see how your levels respond. I mean, everybody feels like the way they prepare for roll is best, I'm sure. We always come in feeling like we've got it locked, but I don't know. They do trade just a little bit different, and I like to see how they're going to work.
Yeah, for me, the switch day is always probably one of the most difficult days for me because, over the years, I've really just almost stopped trading them. And I think that I've just put a blocker up to it because mentally I know that a lot of the order flow that's going to be coming in is what people have to do. And that's the thing you have to think about, traders. When you have rollover, one of the most important things is that people have to do something in rollover. What do I mean by that? I mean that, if you're long March and you want to stay long, you then got to roll to June. If you're short March and you want to stay short, you have to roll to June. And so therefore you're buying one and selling one. That's why the spread becomes such an important thing. And people don't talk about the spread as much, but the spread is really, back in the days in the pit, there was actually a pit just for the spread, which was really interesting because guys would only come in just for that time period during the quarter, and they would trade that week or two, and guys would do really well just by trading the spread. And so understand that there's those back and forth ebbs and flows in the game. And, Farm, I want to talk a little bit about the macro with you because we had this conversation before and you weren't really a part of it. You're also, I think, pretty systematic, but I also do see with through some of your tweets, you do dabble a little bit in the macro. It's great that obviously you're part of the team. We've got Shy Girl here as our senior economist. How much do you take the macro, as we got 8:30 data coming up not too long from now, into play into your trading?
Yeah, I mean, I certainly take it into account big picture. I mean, I make jokes that I'm just a price monkey, but monkey tends to throw poop pretty accurately. Maybe it's just luck, but so I'll look at it big picture and then just look at what the market is telling me in terms of whether I'm right. And I'm not just talking about the big indices, right? But if bonds are responding in a way that is consistent with my macro view, if the dollar is, et cetera. I'm paying attention to that, and you could see it in price. And so a lot of my macro, I have a macro lens, and no formal training, but we've all through life run businesses and been to school or what have you. But to me, it doesn't matter until you look and see what price is telling you, and price across all those instruments can tell a pretty clean story usually.
Yeah, and so for us, we're going to go, when we get to data, right after data, you and I are going to dig into the charts. And just so to set you guys up for the day, everybody, right after the data points, Farm and I are going to go through and we're going to do our morning prep. And then, of course, we get to Tanya. And then along the way, we haven't mentioned Jim Cagnina yet, but he'll be in here soon as well, our senior market strategist, who's Jimmy's the best. And we'll talk a little bit about him, and we'll all be technical. And we're all going to be staying on March today. Is that confirmed, Farm? Are you going to be staying on March at least for today?
I've got my Ninja on June.
Oh, I'll probably,
June? I could still talk March. That's not a problem at all. So if you see my stream, Ninja's on June, but I could talk March all day. So
Tanya,
let's talk March.
What are you staying on? Are you staying?
I'm staying on March today because I looked at the volume and the open interest. It's still higher in March. I'm thinking that tomorrow it's going to be higher in the June contract. I'll roll over tomorrow.
Yeah, and you see everybody. I mean, this is what makes it interesting, right?
I just flipped my screen to March.
Oh, did you? Okay. Yeah, so we'll get to the technical side of things here. We've got data coming up, Tracy. We've already talked about it again, but I think we're probably, we're like 6 minutes out from data, something like that. Give us the expectation again today, because as traders get ready for this, and then I'll go to Farm and Tanya, and I'll talk a little bit about it. What are expectations set for today when we look at the data? What should we be looking for? And also, again, we all know that we're going to be watching the indexes on this, but I want you to take us beyond the indexes. One of the main things that I want to achieve here with NinjaTrader Live is getting traders to look at other markets. One of the things that I have learned over the years is, and I've been doing this a long time. Back in the day, everybody was one market because we were in pits. Then it went electronic, and as time went by electronically, I have found some of the best traders that I know don't trade indexes every day. They're trading multiple markets. And because not every day NASDAQ and S&P are in play, although we want them to be, right? And this is one of the beauties of when we've got Farm and Tanya here, two of the most disciplined approaches that you'll see. They don't trade every day, even though they're day traders. But I want to go beyond what this market data will come out today and how it will impact markets beyond the indexes. So tell us what we're going to be looking at, Shai.
Yeah, so we'll specifically with the New York Empire State Manufacturing, the energy traders will definitely be looking at that number. If it's a better number, manufacturing looks solid in that region. Obviously, that means more oil and gas usage. So energy traders definitely focus on that. We also, if you're a currency trader, that retail sales will affect U.S. dollar. We'd probably see a decline in the dollar if the number came out poorly. We'd probably see that number kick higher. with a really strong retail sales, and so you want to be looking at that. And if you're trading euro, for example, it's so heavily weighted in the U.S. dollar index that any move in the dollar would affect the euro as well. That would be 6E.
Yeah, Tanya, have you even been looking at the dollar this morning? I haven't even looked at it yet. Was it doing
We're
much?
down.
I didn't look at the dollar. Sometimes I don't even look at it. So sometimes it's not even correlated to the indexes, into the indices. But I like it when it's trending, and when I have a clear draw on liquidity for the dollar, then I'm just more confident in my trades. Then I'll probably size up if it's all a confluence. But I haven't taken a look. It's down, you said?
It's down this morning. It's the first thing I look at in the morning.
Isn't that funny? I mean, again, it's, because
sometimes I don't even look at it.
When you have a macro person, of course they look at the dollar first.
Yeah.
It's, for me, it's like one of the last things I look at. I know this morning, treasuries are pretty much flat. You've got silver down a skosh. Gold has now come back to down, now lower.
Yeah.
And
it was higher at about 3 a.m. Eastern. We kind of kicked up and came back. We've got some fun, boozy headlines this morning.
Ooh, it's St. Patrick's Day. It's only right. What are these boozy headlines?
All right, so we've got a headline on tequila. Apparently, people are hoarding tequila in anticipation of a 25% tariff on Mexico. You've that yet? And the French Prime Minister said that the EU tariff on American bourbon was probably a mistake because Trump threatened 200% on wine, champagne, and cognac. So I guess this morning he is saying that was a mistake to tariff U.S. bourbon.
Well, yeah. Listen, you want your numbers to drop. That's the way to approach it. That's crazy. Luckily, I'm actually pretty stocked up with tequila and champagne right now. I think we need to talk maybe before we go into what's everyone's favorite drink. It is St. Patrick's Day. For me lately, I have been drinking Cincoro Añejo. If you have not had this tequila, it's amazing. It's a great sipping tequila. I can't drink as much as I used to anyway. I'm getting old shy. It's very embarrassing. Tanya, do you have a favorite cocktail? Do you drink alcohol?
I don't really drink. I like my electrolytes in the morning. I add some electrolytes to water, and that's it. Although people on my stream, I drink out of a Stanley cup, and they like to make the joke that I'm drinking straight vodka out of there. But it's just, it's literally just electrolytes.
And we have been seeing your questions, by the way. I see people taking digs at me, talking about if I was in a Soprano movie or before. Listen, I would be in a new Sopranos before. Or I would for sure. I know it's a dig at the hair farm. That's what it is. You got an Italian up here. Even though I'm celebrating St. Patrick's Day, I'm 25% Italian. My mom's half Irish. And so, yeah, but I would take a roll into the next Sopranos if there was an opportunity. Farm, what's your favorite cocktail for St. Patrick's Day or just in general?
I don't drink a whole lot either, so just soda for me. I got 4 kids and a wife, man. Nobody has time I don't have time for drinking or sports. Very boring guy nowadays. Now I'm just feeling old, man. I'm just feeling old.
Well, you wouldn't know you were old by all the pictures you've been posting on Twitter. And remember the first time he comes on Future's radio show, he looks like he's 30.
Yeah, well, putting on 60 pounds will do that for you. It's from a picture, that's for sure.
And Shy, you, before we go to break and come back with data, what's your favorite cocktail?
French Sancerre, which is why I got very alarmed at a 200% tariff.
And why wouldn't it be anything else? Just I look at you. Obviously, I've been hanging with you for years. I knew it was Sancerre. I don't want to spoil it. All right, everybody, what's going to happen here is we're going to take a quick break. We're going to come back with data. So right on the turn, we're going to be with data, and then Farm and I are going to go over charts. We're going to hear from Shy Girl on what that data is and what the impacts are of that data when we get to the charts. So stay tuned, and we'll be right back.
Pulse, the latest innovation in real-time market sentiment analysis, exclusively from NinjaTrader. With Pulse, you can see in real time how traders are positioned across key futures markets, including the E-mini and micro S&P 500, the E-mini and micro NASDAQ 100, the standard and micro crude oil, and standard and micro gold. Each symbol has its own visual gauge, showing the percentage of NinjaTrader users holding long and short positions. In addition, Pulse displays the average entry prices for aggregated long and short positions. The needle on each gauge also marks the extremes achieved during the trading session. Available on both NinjaTrader web and desktop platforms, this powerful tool allows you to measure market sentiment with data derived from our own customers' trading activity, tracked anonymously to protect trader privacy. Now you have your finger on the pulse of a bit of real-time market sentiment data, giving you unique insights to help make better, more informed trading decisions. Pulse is live now on the NinjaTrader web platform in sim mode and will be coming soon to our desktop platform. Take control of your trading today with Pulse, exclusively on NinjaTrader.
Experience the all-new NinjaTrader mobile app. We listened to your feedback and designed it with the power and simplicity a modern futures trader needs while on the go.
30 seconds.
Analyze trends like never before with automatic y-axis scaling and over 40 built-in and hundreds of downloadable indicators. Execute trades confidently with the redesigned Superdome, optimized for precision and speed. Make informed decisions with real-time insights into how market movements may affect your portfolio. Monitor and manage your trades either at home or on the go. Available now in the App Store and Google Play.
All right, everybody, let's go to that data that didn't seem to move the tape too much. Shai, what did we see with that data?
So we had core retail sales, which is retail sales ex automobiles, came in line, was 0.3% as expected. Retail sales came in slightly cooler at 0.2%. 0.6% was expected. So pretty much in line across the board. Now, New York Empire State Manufacturing Index took a big hit. We were positive last month. The index fell 26 points to minus 20. That suggests that general business conditions are declining, to say the least. So we had new orders and shipments decline, delivery times and supply availability held steady. Inventories continued to grow, not necessarily a good thing, because that means we're backing up. And optimism around the board waned considerably.
So does this mean really much of anything, these data points? The market doesn't seem to think so.
No, I mean, these are, well, as far as New York State manufacturing, generally we don't really see anything, I guess, again, unless it's energy, and it usually reacts on a good number. Right now, we pulled back a little bit in crude, but not really, and we have so much going on with geopolitical risk right now. But it is just New York State, and it is just one area. So, and it's a survey of business expectations. As far as retail sales, I mean, again, we came in line. You really wouldn't see a huge reaction unless we saw something, a big beat or a big miss on that one.
Yeah, Tanya, initially, any market reactions that caught your eye?
So what I see is this 1 hour fair value gap that we came into on the NASDAQ, and the S&P, it held up pretty well. It's going towards those CPI data highs that I had marked out. And I'm pretty interested in seeing prices going higher later. I'll definitely get into that later. But I think it's a good reaction, nice bullish reaction over there. And I think probably higher prices today on Monday. It might be a slower Monday, but I think I'm looking for higher prices, at least to CPI data highs.
Got it. Okay, so let's get to some tape talk. Farm, you and I, let's take a look at the charts. I think we start with me, then we'll go with you. We're starting with me just because I have something I really want to show everybody right now that I think is pretty interesting when I look at my charts. And this is something that I look at on a regular basis. And so when I look at when I come into today, there's a couple things that I look at. So first off, I'm going to start off here on the daily chart. Now remember, we are going to be focusing on March, right? And so it's an interesting thing because if you go back, I've been writing about this for the last month or so. I said typically we find a significant high or low during rollover. It's a common thing. I've seen it over the years. I'm not a science guy. I don't think a lot of things. And when I say science guy, I mean I don't go back and look at all stats. A lot of what I've done over the years is just by remembering it and seeing it situational, right? And that's just how I'm built. I do back testing on certain things, but for the most part, I've just noticed. I mean, I even go back to like March of 2000 when that high was made. It was like it made right around rollover. And I've just noticed that year in, year out, we make the significant high or low. And what I use to gauge that is Bollinger Bands. So what's interesting here is when you look at the daily chart right now, you have the top Bollinger Band, which has been reverting back in, and the bottom Bollinger Band is starting to get flat. And potentially what we start to see is this mean reversion back up, potentially into what we've been in. And I'm looking at just some simple moving averages here. And ultimately what I see on the chart is that right now, the market could be setting up, going back to kind of what Tanya said, that it's setting up to where we're like in this mean reversion type mode now. Obviously, as we get through rollover, we'll see. Now on the daily, that's not fully confirmed yet because as of right now, we don't have that bottom Bollinger completely flat yet. But ultimately, it's getting close. And this is what I mean by right here. So the next thing I'll do is I'll go to my 60-minute chart. And what I look for with my indicator, which is free, it's just I call it beacon, is every time the Bollinger Bands get flat and start to revert back in, I look for mean reversion back moves. So if you go back to here last week, March 13th and the 14th on a 60-minute chart, you can see that the markets hit the blue level, which is a 30%, yellow's 50%, red is 70%. Once these Bollinger Bands started to come back in, we had a mean reversion back to yellow and eventually up to red. So this is like a reversal off this low, right? You see that blue line come in. Again, everyone, it's just when the Bollinger Bands are coming in, it's just drawing a line saying, look at Bollinger Bands are now coming back in for mean reversion. This is 30% of the Bollinger Band. This is 50% of the Bollinger Band. And the markets revert back up. Overnight, I saw it to the downside and to where it's telling me that we would go down and trade 55.91 as long as we stay below 56.26. And what's happening is we're pushing above 56.26. Why is that important? It's important because I look at this when we look at any strategy you're looking at. It's all about the market reaction. Right, Farm? I think that's the most important thing. And I think you and I can both agree on this. It's not necessarily our strategy. It's like, did the market react to what we're looking for? And right now, it couldn't stay below 56.26. So therefore, 55.91, which I thought was initially in play, is not. And now I think we could have a potential spike today up to 56.79-ish because I think we go back to this top Bollinger Band. And the reason why I think that that's possible is because anytime Bollinger Bands are being made, and this is interesting, when you think about this, when Bollinger Bands are being made, they're expanding volatility, and when they start to come back in, that peak of that Bollinger Band represents the furthest standard deviation you could be if you're looking at a 2 or a 3. I look at 20-period 3 standard deviation Bollinger Bands. So I look at that as like potentially where the potential was. And so I like these old peaks to potentially go and test. So today, if we're above 56.26, I think 56.79. If we're below 56.26 on any hourly closes on the 60-minute chart, I think 55.91. So I went a long way around that, Farm. I don't know what your thoughts on what I have, and then maybe we'll get to your charts here in just a minute.
Yeah, I mean, one thing that you said I think is spot on, and I was looking to potentially see roughly 56.92 as well this morning. I mean, sellers had their shot overnight. And it just looked like Europe opened and said, we're going to run your stops and then lift it, which they just love to do. It seems like every time you try to go to sleep with a position on, good luck. But I would have expected sellers to get 56.92 as well. Below, for me, it was about 56.07 to 10 anyway. And it looked like they just kind of pooped the bed down there. So to me, it definitely starts to look like, those wicks are in play up above us.
I'm not even supposed to be in this second.
All right. Maybe we'll go to your charts. That's all I have for today. And for me, again, because it's March, because it's rollover, I don't have a ton here. But when I look at what's happening within the markets right now, I feel like, similar to Tanya, that I think that higher prices are likely today. I mean, this momentum off of that low on Friday is definitely carrying over. And it doesn't seem like, unless there's news, something to kind of rattle it. And again, the buy the dippers are always out lately, farm. I mean, not lately. This is for forever, right? Yeah. I mean, they're never not there. But they were, I think, trained such bad habits that ultimately what happens is that you see, this is why markets have these big corrections, right? Because you're trained as a buy the dipper, and it works most of the time. And then all of a sudden you have these big corrections and just people get wiped out, right? And then now you feel like it feels like part of that has been a little bit wiped out. And now that we'll start to rally, there's like no one there to buy it. It's kind of like, everyone's like, I'm not buying this rally.
Yeah, no, definitely understanding a constructive dip is important versus a non-constructive dip. This had not been a constructive dip to buy, so.
Yeah, I think maybe now we switch over to your charts if you have your charts available, and we'll take a look at what you have and talk about that. I think a constructive dip is important. Has this one been one? Let's see what you're seeing, or just tell us what you're thinking about this market in general.
Yeah, let me know if you pick up my screen share or not. Looks like it. Yeah. So, I mean, right now I've got weekly volume profiles on my chart. I mean, if you're not a volume profile trader, that's fine. I mean, I think really anybody could add just a little bit of that to their traditional technical game and pick up a lot. So I'm on the 30-minute here. And, we can see that we came in and we formed this volume, and most of the range for last week was put in here between, let's call it 56.40-ish, I suppose. The top side, and 55, 60 to 70. And we had that excursion that got a little bit gross on I guess it was Thursday. And I was really looking to see some nice capitulation puke, right? Where just sort of that last seller just got it out of their system. And I didn't really see that, but I did see some things. I think I mentioned I was looking at ZT and USD JPY and volatility, and it looks like we got a little bit of that sort of last forced feeling, into some of those positions there. And so I felt like that was probably good enough to put us into some kind of a short-term interim swing low. And so, we saw that follow through on Friday. And I don't know if you watched overnight, Thursday night, I should say, into Friday. But the character very clearly changed. I mean, there was a lot of aggression during Asia, which isn't, more aggression than you would normally see in Asia, and really every Tate bomb was just eaten all of a sudden, right? And so when you see that happen, where some aggressive selling comes in and it just gets absolutely nowhere after, I mean, how many weeks? Then to me, it's probably time to start paying attention. Maybe we've moved into a buy the dip market, at least for the short term. But I mean, on the way down, when you're breaking major technical levels, you've got, long traders trapped well above you. I mean, if we just kind of zoom out here multiple weeks, I mean, it's just constantly building volume lower and lower and lower. And so when you've got that overhead, it's just tends to be a little bit difficult to hit that buy button anyways to get long. So to me, it was covers only for the most part, with some selective longs, because, of course you can get some fantastic rips in a bear trend, but you really have to time them perfectly and know what you're doing. But again, now I feel like this has the potential to give us a decent low anyways. I would love to see this rally. Honestly, that should scare you if a bear like me wants to see us rally. But it was a decent low anyway. So if we can break away from this range here, and I am definitely worried about just pops up here, running some stops and getting sucked back in. If you're a bull, you don't want to see this pop up here and fail and then get sucked back in, because we have the potential to just rotate all the way back down. So I would like to see higher prices, see a clean break away from this range, and maybe bulls can have a few more days of fun.
Yeah, I mean, it certainly feels like that. And I go back to what I talked about, how a low a lot of times is set heading into that last week of rollover, and you've got options expirations, you've got a lot coming up. I mean, we've got FOMC this week as well. I mean, obviously the data or any headlines that come out potentially could be, things that derail this rally again. But from a pure technical standpoint, if you take all of that stuff out, man, I'm seeing a low form. I think on the daily, it's looking pretty much like it's potentially happening. I mean, do you feel similarly just in general when you look at it and saying it's not there yet, but it's like close?
Yeah, it's definitely my lean, again, at least short term. I mean, do we maybe see lower later on? I think that's still on the table. Are we going to fish for a lower high? I think that's a possibility. But it definitely, again, like seeing that puke on Thursday that was decent. I want to see urgency. I want to see panic. I want to see that forced selling. You talked about, what people have to do. And you were talking about it in the context of, a rollover and not wanting to trade. Because you want to see what people want to do versus what people have to do. When it's not rollover, I actually want to see what people have to do, and I want to see them do it. And I wanted to see a few more people have to sell than we did. But I feel like when you combine the fact that we sort of reclaim this range, we've now ripped to the other side. Sellers had their shot, and now it's buyers' moment to take a shot here. And again, really the fact that Thursday night, the tape really flipped. And then as we both pointed out overnight last night, I guess early this morning, same thing. Sellers had their shot to get this down to 55.90s, and they had nothing. So, fine. You had your shots, the bull's turn. So let's go ahead and see what they can do, and maybe we can see some reclaims. If we can pop back into the range of this trailing week, I definitely think this is trouble spot here. Potentially running the CPI wick is potentially a problem. Potentially running Friday's high and reversing back down is potentially a problem. But as of now, if we rip straight out of here, I'll probably be looking for a lower high to short later on, but not right away. Certainly not right away. And then if we do just kind of come up here, run some stops and fail and get sucked back into range, I'll probably be stomping on the sell button pretty hard.
Maybe NinjaTrader Live is getting everybody ready to buy today, because the market continues to grind up here since it all started, with the data. And then Tanya said how it looked like bullish. You and I have both said the same things too. I think the world's just feeling kind of bullish here on St. Patrick's Day. And Monday's one thing I want to note before we bring in Jim Cagnina, our senior market strategist. Want to bring Jim into this conversation as we get to an edge report, is that one thing I've always learned about Mondays is a lot of times when we have a market set up on a Monday where it's kind of quiet, it comes in and it starts going directionally in one way, it tends to just be a one-dimensional market. Like right now, it feels like vol is kind of getting sucked out of the market. Everything is looking like we might just be a grindy higher day, which we've not had for a while. And I think, again, what's interesting about these markets is that they change a lot quicker than they used to, right? I mean, like psychology goes from like buy the dip, buy the dip, buy the dip. Then all of a sudden it's just like sell the rip, sell the rip, sell the rip. And it just stays consistent, right? I mean, you have it just keep going. And now all of a sudden we might be in another environment where it's like, okay, maybe we're digesting rollover, we're getting into FOMC. And all of a sudden, maybe we have a slow day where it grinds up and people just get death by 1,000 cuts trying to sell these rallies. And ultimately, now you have to be working the bid. And we'll see how this looks as time goes by. Now, let's bring in senior market strategist at NinjaTrader, Jim Cagnina. Jim, how are you this morning?
I feel great, man. It is so great to be back. These last couple of months, I've been going crazy. My wife's like, why are you talking to me? I'm like, because we're not live. And so it's great to be here for sure and see some great old friends here in the chat as well. A couple of really quick shout outs. Deli, Engineer Bear is here with us. Good to see you. Fat Fish, good to see you. I'm on a health kick. No donuts for me.
I know. I can't wait to have you in studio, Jim. They're bombarding me with these sweets. We've got Shab and Savannah. They've got snacks everywhere. Yeah, I mean, oh yeah, the camera. Have you guys seen the cupcakes? We got to do we got to hold it up. We got it here. Do you see what you're missing here, Jim? Let's see if we can get these in a frame.
Oh,
well, we've got local cupcakes here. We've got sunshine. We've got snacks. Wait till we get more and more people in studio. It's unbelievable. We got a swag room behind us. We've got all sorts of cool stuff, but you have to come in to see it, and we're going to have some really cool guests. But Jimmy, we're going to go to you for an edge report, which we're going to be doing regularly throughout the day, and I love that because really, when I've known you for many years, I don't think people know enough about your background and how much you've done in this industry, and really your backdrop is really, you're a bond guy, but obviously you're so much more than that, but you understand the bond market extremely well, which I think is so important because every day when Jim's going to be doing his edge reports, he's going to be covering all these markets. Just give us some quick thoughts on what you heard from us this morning from the macro side, and then we'll let you go to the charts and give us an edge report.
Well, yeah, no, I love what you guys are talking about. I love what you guys are talking about. This is a big week. As everyone's mentioned, right? We have rollover, we have FOMC at the same time, and a lot of moving parts here. We have triple witching, I think, is options expiration on Friday, which makes it even more complicated to look at the March versus the June stock index futures as an example. But you got to look at them both to get that extra data. Right now, I just have a daily chart up on the screen. If I could talk about this, just this establishes my bias, right? We are in a drawdown, and I love the fact that Shai didn't mention the word corrections because everybody knows I hate that word. The market's never incorrect; it's always correct. But we're down 661 handles from its peak not too long ago. So my bias right now, Deli, is bearish. Pulling in a daily, we're seeing, again, in a bearish environment, you could always have bullish price action, and this is eating my fib already with this big rally that we saw on the open, or not on the open, but right now. And we've got some really important gamma levels that I like to look at. I'm using the Menthor Q gamma levels right now. So the E-mini S&P, we have JAX 1 and JAX 2. I'm going to refer to them as JAX. JAX 1 is the biggest gamma level. JAX 2 is the second biggest one. And they kind of tend to be targets, and they're kind of more important now, especially this week, to look at where maybe the price could be pinned between. JAX 2 right now is it's 56.50, if you could see my chart. I know I have a lot of lines all over the place, right where my crosshairs is. So that's kind of the level here. I would anticipate some kind of resistance. Maybe not, but very possibly. That's kind of my opinion on that. So we'll see how it goes. Put support is all the way at the bottom here, which, again, we're not surprised. It's 5,600, even number. You can see we wicked through it a couple of times, and it's like, nope, buyers came in and pushed us back up, so we couldn't penetrate there any further down. That's just kind of the story of the E-mini S&P. All right, moving over. Thank you, Kevin. Let's just jump over to the Treasury bonds right now. It's pretty much unchanged so far, and I'll just show a daily chart, although pretty big red candle right now on a 15-minute candle. I'm looking at a 15-minute candle. And again, that call and resistance level for the 0 DTEs is right at that, even number, that 117 number that shouldn't surprise anybody. We have a high vol number down here, though, at 116 in 30 seconds. Remember, 30-year Treasury bonds are traded in 30 seconds, so that's really a half a handle. So 116.16 on the downside. But this is a wicked big candle for this market right now, but we're still almost unchanged on the session. So we'll see how that goes going forward here. I'm a little bit open-minded on this market, but the volume profile is really kind of messy right now. It's not giving us a clear kind of point of control. Yeah, we have a point of control right at that call resistance level, but it's not terribly significant. Jumping over to gold. Gold is another really interesting one. We have that 3,000 kind of psychological number here. Apologize for my old fib lines. They're eating, the chart's eating my fibs. We're going to delete them because they're not necessary anymore. But there's that 3,000 level right there, right at the daily pivot. Daily pivots are kind of important. I like to look at those in conjunction with the actual, with the gamma levels, along with previous sessions highs, previous sessions lows. And, we broke through that. We traded through it 1, 2, 3, 4 candles in a row. So for a whole hour, we're trading through that 3,000 level. Finally, sellers took over, and now we're creating, I don't know, you can call this a triple bottom if you want, but there's, draw my rectangle. 2991-ish, give or take. We're tapping at it again. High vol level, for 0DTs is at 29.90. So there's some downside here on gold as well. And usually you see this kind of like inverse relationship with the dollar and gold. Not perfect. Not perfect. And on an intraday chart, you could even shrug your shoulders maybe a little bit and say, well, I don't know how important that is. So that's kind of the story there. I did want to just kind of circling back. I forgot to do this. I just wanted to check out the 10-year versus the 2-year yield. These are the CME Group micro yields. And I like to just kind of track to see what the separation is in basis points between the 10-year and the 2-year. And right now we have about 28 basis point separation on the normal side, meaning the 10-year it's been for a long time now, higher than the 2-year. So that's kind of a step in the right direction, I think, with respect to that market. And if I got time left, let's just shoot over to the next market on my radar screen, and that is Dr. Copper. Dr. Copper, again, is a really good market to look at. There's micros in the Dr. Copper also, copper futures. I shouldn't say Dr. Copper all the time. I'm channeling my inner Dan Gramsci right now. And we have resistance pretty far away. We hit that pivot number perfectly at R1 on the upside, and we kind of broke right back down into the London opening range right now. Put support at 4.90. Pretty solid, just below the pivot. So I'd expect maybe some sideways trading between R1 and the pivot for a while until we actually break out. We'll see what happens on the open with Dr. Copper.
Jimmy, that was fantastic. Looking forward to your edge reports throughout the day. Again, traders, what's so important is, and I said this earlier in the show, the most successful traders that I've seen on the screen these days, they're not just trading the indexes, they're trading more than just one market. Now, I'm not saying go out there and just start slinging, gold and oil. That's not what we're saying at all. What we want to do is help you provide structure around these other markets. It's very important because not every day are the equity indexes in play, and sometimes you're just not going to get a trade. It doesn't mean that you have to go and trade somewhere else, but it just means that you need to expand your horizons a little bit. And Jim is really one of the best when it comes to laying out what's happening in the spectrum of markets. So this way we understand, whether it's macro moving these markets or it's technical, and then you can start to look to build strategies around those other markets. So thank you so much for that, Jim. Everybody, we're going to take a quick break. After the quick break, we will be back with Tanya. She's going to do her pre-market prep, and then Tanya will be trading live for the open. So stay tuned. We'll be right back with Tanya.
Pulse, the latest innovation in real-time market sentiment analysis, exclusively from NinjaTrader. With Pulse, you can see in real time how traders are positioned across key futures markets, including the E-mini and micro S&P 500, the E-mini and micro NASDAQ 100, the standard and micro crude oil, and standard and micro gold. Each symbol has its own visual gauge, showing the percentage of NinjaTrader users holding long and short positions. In addition, Pulse displays the average entry prices for aggregated long and short positions. The needle on each gauge also marks the extremes achieved during the trading session. Available on both NinjaTrader web and desktop platforms, this powerful tool allows you to measure market sentiment with data derived from our own customers' trading activity, tracked anonymously to protect trader privacy. Now you have your finger on the pulse of a bit of real-time market sentiment data, giving you unique insights to help make better, more informed trading decisions. Pulse is live now on the NinjaTrader web platform in sim mode and will be coming soon to our desktop platform. Take control of your trading today with Pulse, exclusively on NinjaTrader.
Experience the all-new NinjaTrader mobile app. We listened to your feedback and designed it with the power and simplicity a modern futures trader needs while on the go. Analyze trends like never before with automatic y-axis scaling and over 40 built-in and hundreds of downloadable indicators. Execute trades confidently with the redesigned Superdome, optimized for precision and speed. Make informed decisions with real-time insights into how market movements may affect your portfolio. Monitor and manage your trades either at home or on the go. Available now in the App Store and Google Play.
Welcome back, traders. The time has come. We've got Tanya in studio. Tanya, A lot of conversations this morning. Really love that you're here in studio. It's great to have you. What are you seeing for your pre-market prep today?
ES and NQ on the daily, where ES took out this low and the NASDAQ did not. So that could be a potential indication of a reversal, right? So I have the CPI data high marked out also on the daily, which was last Wednesday, I believe, right? Yeah. And I think that's the next draw on liquidity. And it does seem like we're heading towards that. The NASDAQ's almost there, actually. But I do think that we could, depending on the reaction to that high, I'm going to look for higher prices if it continues to displace higher. So here it can go to the 4 hour. I have this marked out, noting that we have divergences here between ES and NQ. And yeah, I mean, we're slowly getting there. I think ES pretty much got to the previous swing high, but not to the CPI data high, while NQ is almost there. So if we have this reaction, a strong displacement through this, I'm also looking at this 4 hour fair value gap here. I'm going to mark out on the 4 hour. I'm kind of interested to see how we react here as well, because from this swing high to this low, this is definitely in a premium. This could be, if this high gets just wicked, this CPI high, and then we show like a rejection on the 15-minute and a shift of structure, then I'm going to be looking for shorts. But if we have a nice like reaction to it where we displace higher, I'm going to look for more longs, potentially up to these. This volume imbalance here on the 4 hour actually looks pretty good. Let me see. Yeah, so I'm looking at that. We could potentially get all the way up to here actually. Yeah. But yeah, I definitely am marking out this high, looking at that. I do like that on the hourly, like we talked about here. We're just showing bullishness still, right? So I'm not going to really go against the hourly order flow right at the moment, because that's just a little bit, there's no reason to go against the trend if it's on the hourly. Unless what I would do then is look at the 5-minute for a continuation, but I think we had it here actually, yeah. So on the NASDAQ, you can see we did have a 5-minute fair value gap and we just displaced there. This is the news though, so that makes it a little trickier. And yeah, so I'm thinking that we're going to continue higher, but if we just wick this high there, then I'm going to definitely look at the 15 for reversals. I don't really like to just predict what's going to happen at that high or low. I just mark it out. And yeah, I think that looks pretty good though. We didn't hit it yet, so I'm definitely not going to start fading yet. I'm always suspicious when we make equal highs there that we're going to rail them later, right? We're going to just continue up higher into it. So I do like that actually. If we just, oh man, I always think about like the best case scenario, and what I would love is we keep this high intact, and then during the 9:30 open, we maybe take out a little pre-market low, and then we shift higher and we go for that. That would be great. But don't always get what you want in the markets, but I do like to anticipate what my best case scenario would be so that I'm ready to execute when it comes. So yeah, I'm kind of excited for this actually. It doesn't really look too bad for Monday structure. A lot of times Mondays can be just rangy, but yeah, I'll definitely be marking that out, as well as I always put a vertical line at the open. Check that out here. And what I also like to do is take standard deviations for potential confluences here. So I'm going to look at the hourly, and then I'm going to draw a fib out. And this is like the fail swing lower, so I'm going to definitely look into this, and then I like to look at the extension levels and see, does that line up with any sort of high or fair value gap. So I do see that like the -1 extension on the fib does line up with a little bit of a gap here and potential resistance later on. So I think I'll mark that out. If we continue higher from there, I will definitely look for potential repricing to here.
Couple questions for you. One is, I love how you talked about the pullback, maybe take out a low and then get back above that low, and then all of a sudden it's like there's always a shimmy shake, right?
Right.
I like those as well when I'm looking to get in, because when you see some stops get blown out a little bit and then you feel like, okay, either if you've been short, you look at the market and say, now people are seeing that this low was taken out. Now maybe you start to see some people covering. If we start to regain that low, and if you were long, you got taken out, and maybe you're like, okay, do I want to get back in? So you could feel the supply start to come back to the market, right? Like there's demand for that at that moment. And I agree, especially when you're looking at, and so this is my question is that when you're looking at from where we came from, because we've been so bearish, is that the more likely trade that you look for? Do you look for a little washout, regain it? Or are you okay? Are you comfortable with buying into a rally on a day like today?
I really like to see a manipulation before I get involved, on either side, because then I feel as if people got stopped out, and then I'm more likely to trust that swing high that took out the stops on the upside to go lower. Or let's say now I'm bullish, right? So if we see a manipulation of those lows and then we swing below them, then I'm going to feel very comfortable putting my stop there, because there are stops that are blown out there. And then also there's going to be people that are going to want to get back into the marketplace and get on the right side. So then it's all about the psychology behind it as well when I think about my entries, and the higher probability ones. So that's always the higher probability one, is if there's a manipulation, then I feel way more comfortable taking a trade, because otherwise I might be the liquidity. Like I'm buying too early. Sometimes you're too early. And then I'll try again after. If I get liquidated, like if I get stopped out of my position there, and then we have another shift higher, then I'll re-enter. But oftentimes I've just noticed that a lot of the times if I'm getting stopped out, it's because I'm a little impatient on that. And that's what I have fixed that a lot over the past. Yeah.
Yeah, I like that thought, of you're comfortable putting a stop in a low after a stop run, right?
Exactly.
I mean, I think that's so psychologically important. I mean, Farm, I want to bring you into this because I think this is an interesting conversation as we're getting ready for the open today. As we said, Tanya is going to be trading live throughout the morning until 11 Eastern. And thanks for setting us up for what it is. But I want to have this conversation real quick about placing a stop, because it's, first of all, place stops. I mean, a lot of people don't place stops, which is crazy. I mean, I know the only times I don't use stops is when I'm using options. But if I'm trading futures, you got to have a stop in, because I plan to trade according to that risk. And Tanya makes a great point, Farm, and I'm curious how you kind of look at this too. I kind of like that little bit of a washout. A low has been made or a high has been made, and if I want to be in that direction, I'm more comfortable putting it in after that flush and a low or high gets regained after a stop, because like we said, I like a stop after a stop run has been made. Do you look at something like that?
Yeah, I mean, I definitely want to have my stop at an appropriate technical location. And after you've seen that washout and seen those stops get wiped, I think that's a good place to go ahead and put it after it's been run. And then to me, I'm just adjusting size based on where I enter. So, I mean, you had mentioned earlier, some people want to keep the same size all the time. To me, I don't want to just say, okay, well, I'm going to risk, 2 handles because this is my full size if, the technical stop is 3.5, right? So I'll adjust my stop there. But, I'm always looking for traps and looking for somebody to, one side to get off sides and then take it the other way. And so that's absolutely what I'll do is look for, a failed push in one direction, call it a stop run or whatever you want, failed breakdown, whatever you like to call it. But that's absolutely what I am looking for. I am a reversal trader, not to say that I fight trend, but, I'm looking generally to take, short time frame reversals that run back in alignment with, the higher time frames. And so anytime you see that push, that one less push on short time frames in the opposite direction, I'm looking to take that reversal. And then you do have a nice technical stop to work against.
Yeah, I mean, so we've got 20 minutes before the open today. Let's just go, maybe we'll go around again. We just heard from Tanya. I talked really briefly about how I think that today, first of all, we've got rollover. We're in March, right? We're potentially, a lot of people moving into June. We know that that's potentially going to be, cause some back and forth. When we have rollover, people have to do things, not necessarily want to do things. Remember, if you're long March and you want to stay long, you got to buy June. So you're selling March, you're buying June, or vice versa. If you're short March, you're buying March, you got to, sell June. So there's that. And I think a lot of that you're going to see right in the open. So a lot of times on the open, especially on these rollover days too, right, Tanya? Don't you see, do you wait for that initial thrust for that, knowing that's coming?
Yeah, I typically am going to wait until 9:45 to enter a trade. I mean, it's pretty rare that I'm entering at the open because I like to see what the first 15-minute candle of the day will be, and I also like to see if there's going to be a nice stop run at the open. That's the most volatile of the day. So, yeah, I definitely am watching out for that, and then seeing if there's a strong reaction from where those pre-market lows are, where I'm watching for a manipulation level. And then I'll feel more comfortable getting in afterwards because I feel like things are more settled. Also, it's just like I said, with the stops, I feel more comfortable with it.
Yeah, I feel the same way about today. It's I'd like to see a little bit of a pullback. I talked this morning at 56.26 holds. I think the possibility of 56.79 is reasonable today. So we'll see if there's a little bit of a washout. That's something I would be looking at as well, to see if there's a little bit of washout lower, then all of a sudden to stabilize and potentially grinder higher on a Monday after we get this initial rollover stuff. Farm, to you, I know we're you're going to be done and you're going to be moving on at 9:30, going back to your Substack, which everyone should definitely follow Farm on Twitter and go check out his Substack. It's the best. What is your kind of dream setup this morning and what you're looking at, and then the bias of what your of direction that you'd like to see for your first trade?
Yeah, I mean, for first move at this point, now that we had this move on data, if I'm going to be looking for longs early in the day, I'm looking for roughly 21 to 24 to hold. You said 26, that works. And I feel like if that doesn't, then you might see some early morning puke. Which I may join in on the short side. We'll see. And then from there, right, let's see where they take it. Again, I mean, sellers overnight really had nothing. They didn't really get where they probably should have. But if we did take Friday's high. I mean, it was pathetic on ES. What a tick or something on ES. The Qs were a little bit better. So I mean, if we then sort of fail all the way back into range, then I wouldn't mind it if we failed and today was a short in the morning, and then we just saw some further consolidation in range, maybe down to those 55.90s, from overnight would be nice, and then like you said, popping back up over. I'd say 56.07 to 56.10, and then it would have to work back up into those 20s. Because I agree, with Tanya, you see some of those relative equal highs, and it's just begging to be taken out ultimately. So I wouldn't mind that trade if we catch a morning short, and then we come back up and get those later, whether it's this afternoon or whether it's tomorrow. That's kind of what I would like to see if I'm going to get involved.
Yeah, I mean, I go back, that 26 level is something I looked at. I talked about with my Bollinger Bands and what I'm looking at here on the hourly for March. If we do get an hourly close below 56.26 this morning, then I think 55.91 is in play. But one thing that's interesting is that now my levels that I'm looking at have narrowed, right? It feels like volatility's been sucked out a little bit, don't you think, Tanya? Or do you think...
I think so. It's a quiet Monday. There's no high impact red folder news today, so it could be just quiet today. Especially we have the Fed meeting this week.
Yeah,
right?
Wednesday. Yeah.
Yeah, so that's something I'm thinking about.
Yeah, and when I look at it, I mean, last thing, because we heard really more of Tanya talking about NASDAQ. You and I are talking about ES. I haven't looked at them in a while, basically comparing apples to apples in terms of the daily or the 60-minute, just because it's been so busy. I've been able to just stay on one chart. I think what's going to be important today is we don't see divergence either, right? Because that also can be a real choppy tape, like NASDAQ versus Russell versus Dow. We've had really some weird divergence days going back, I think the last year and a half, whatever, where we've had massive disconnect from what's happening with Russell. We didn't even talk about Russell today, where that's been kind of just throwing things off a little bit. I think today what I'd like to see is some consistency across the board. When I look at NASDAQ, the chart doesn't look the same to me. When I look at Russell, it's trying to squeak up a little bit of a higher high. I mean, my indicators are not giving me the same look on Dow and NASDAQ and Russell and ES. It's like kind of a different look across the board. Like to me, Dow is relatively weaker. Tanya, I know you're going to be trading live and you'll be watching. We'll be watching you for that. But do you ever look for that? Like right now, do you feel that like, especially on a quieter day, are we potentially going to have like, does divergence matter to you at all? Like if ES is maybe lower and NASDAQ's rallying?
Yeah. I honestly don't really look at the Russell too much because it's such a different index from ES and NQ, just company-wise. It has like 2,000, right? So then I don't really look at those two, but definitely ES and NQ are the prime ones I look for divergences between. And also I do look at YM. But for me, I do like a divergence if it's at a key level and then they start to go in the same direction, right? So if like ES doesn't take a low and then NQ does, then I really like that. But I don't love it when NASDAQ is just so weak and like then ES is just range bound, like just barcoding, and then you have the Dow just going higher. Those are days I'm not a fan of because then it's pretty low probability because all of them are out of sync with each other. I at least want them to be semi, like in the same bullish or bearish structure.
Yeah. And if I'm long or short any one of the indexes, I've always learned buy the one that's strong, sell the one that's short, right? I think so many people will be like, oh, NASDAQ's weak, S&P's up, and you keep trying to buy NASDAQ and you're just getting blistered the whole way down. You buy the strong one, especially if you're an index trader and most people are ES or NQ. Like, I think that's the biggest mistake I think a lot of traders will make is that, oh, one is up and one is down, and they try to fade or buy the one that's weak to catch the one that's long, or sell the one that's strong to catch the one that's weak. And it doesn't work that way. Do you notice that as well, Farm? Is that something that you look at, divergence, or if they all working together?
Yeah, and I kind of look at it a couple of different ways. Tanya had mentioned, a minor relative strength versus relative weakness being a sign of which one to get into. I completely agree with that. But then also what you're saying, Deli, when they're just kind of diverging a little bit too much. I mean, overnight during Asia was a fantastic example. I don't really like to say pivot or use a pivot, but to me, like NQ was sitting just below my pivot to potentially be long, and ES was sitting just above it. And the Asia session was just a disaster of chop. Like it was just terrible to try to trade that, I think. And it just didn't behave well. And so to me, to your point, I'm probably avoiding both in that situation. Whereas if it's a situation where, structurally, how they're behaving on, let's say, the prior day's, profile, if they're both behaving the way they should be behaving, and then one of them is just a little bit stronger, that I think absolutely you're taking the one with the relative strength. And I completely agree that a lot of traders try to play catch up and it just ends up being a little bit of a disaster and missing out on a good trade. So I definitely look at that quite a bit.
Yeah, I mean, Tanya, I think we start handing it over to you. We're getting close to the bell.
Good.
And, Farm, I know you've got to get back to your crew. Again, everybody, make sure you follow Farm on Twitter. It's been great having you here on the first day. It's really, I'm so looking forward to everything we're doing here together with you, Farm. And yeah, man, have a great day. And then we will see you tomorrow morning. Same bad time, same bad channel.
That's right. You kids have fun this morning.
See ya, Farm.
Yeah.
So Tanya, we're gonna leave it to you this morning. I'll be probably peeking my head in and out. I'll be over here, looking at markets along the way. I'll hand it over to you. Set the tone for traders for NASDAQ today, right? That's primary. No S&P. That's really going to be the focus. Is going to be NASDAQ.
I look at both side by side, basically. I mean, I've recently started trading the S&P a lot more often, actually, because I feel like the volatility has made it great again. Like I used to, I was like primary NASDAQ, but like sometimes the ES honestly runs less stops. Sometimes the NASDAQ will run a stop twice. So I feel actually more comfortable if it is the stronger one. I'll do long ES, like no problem. I like to look at them side by side all the time, and then I'll look at structure, like you said, and I'll decide which one I'll take by then. Like we saw, Nasdaq took Friday's high much more, like extended more than ES did. It only took it by a tick, Farm said. So it could be that Nasdaq is stronger today, but they look pretty similar in structure. So I guess I'll just have to wait and see at the open what ends up happening. But yeah, I'm excited. Honestly, it doesn't look too bad for a Monday.
Curious question for this, and I mean, I pretty much know the answer, but I'm wondering from your perspective. You choose NASDAQ. I see so many traders coming into this space now trading NASDAQ, specifically the micro NASDAQ. It has really become, the micro NASDAQ has overtaken popularity of the micro E-mini S&P. Maybe not NASDAQ versus S&P for the E-mini, but for the micro, traders love the micro NASDAQ, these day traders. I mean, I know it's volatility, but I'm just curious from you, is it technical? Is it volatility? Is it all of it?
I think so. And I think just the NASDAQ does move 10 times faster than ES. Like people love that. Like, I mean, I like to be in a trade as little as possible, honestly. So then your risk stays within that trade. The longer you stay in a trade, like the more decisions you have to make and the more risk you are taking on, because dynamically, whether it's moving in your direction, then you have to look at where you're trailing your stops to. And it just is, like, I think it is part of it. It's just the speed, and it's more fun, honestly.
Trader, they love the juice, man. They love it and going. And I get it from a day trader's perspective on why they like the NASDAQ. I just think, I wish that a lot of these traders would be more particular with it. And that's why we're really excited to have you here, because you are particular with it. Because if you try to chase the NASDAQ, you're not going to win that game.
Yeah, no.
Now, it's about slowing things down, understanding what's happening from macro as we've gone through. Like, okay, what's the story? Is there something driving it today? Was it data? And then putting together your plan, working your stops, and executing. And so we're going to leave it to you here, everybody, just to set you up what's coming up later on. We got 10 o'clock. On the 10 o'clock hour, we will have Tracy, our senior economist, come back in, see if there's any market moving headlines and report any data points that are coming up. Of course, we're going to have more edge reports. And then later on today at 11 a.m. Eastern, we will also have Tracy will be doing hot commodities, which I think is going to be such a great subject to be discussed. Her and Jim Cagnina, our senior market strategists, are going to be discussing what's happening in the macro from Tracy's side, and then Jim's going to be taking a look at the charts and going over all these different markets. Again, we're trying to get you to look at other markets as well. Futures markets are big, right? We set the price for all of the commodities, in the world. And so I know that most everybody is going to be index driven. We get that. We're going to cover indexes, but to understand and to really take you a little bit out of your comfort zone, maybe look at these markets. Maybe a NASDAQ trader might find gold appealing, might find copper, might find that interest rates is a better market for them. As I said from the beginning, the traders that I know that have had the most success, myself included, when I started expanding outside of just the indexes, I trade a lot of treasuries during data points. I'll dip my toe into crude and gold when they're in play. That's the key, recognizing when they're in play. So we're going to be bringing you all that. And don't forget, later this afternoon, the Order Flow Labs crew, led by Leo, is going to be trading the close live. So make sure you stay tuned for that as well. That's it for me for this morning, at least for now. I'll be back in to chat with Tanya periodically. I'll probably see you guys at the 10 o'clock hour. But Tanya, we hand it to you. Trade the open.
Okay, awesome. Awesome, you guys. So yeah, we are about 5 minutes away from the open. I am noting on the NASDAQ and the ES, like we talked about here, during 8:30 news, we dipped back into this hourly fair value gap on the NASDAQ and ES. So right there, I'm going to mark that out. And then we took Friday's high. I don't know why. And then we took out Friday's high. Now we're kind of coming back into that area. And I want to see, are we going to take out those sell stops? If we do, if we take out like this low, these lows into it, I'll look for potential reversals and maybe like a swing high taking out, shift back up bullish to take out more highs, especially CPI high. So then what I'm going to do here I also marked out the standard deviation from that low, the swing high to the low that we took out on ES, and then also on NASDAQ, the failure swing lower. And I have my extensions here, and I have that liquidity void up there. And yeah, this lines up as well to this negative 150%, which is negative 1.5 standard deviation extension there. So I'm basically always looking at swing highs, swing lows, and fair value gaps. We just took a swing high, so I'm not just going to go look for a continuation right away. Maybe we take out, come back, reprice to this area, or even just midpoint of this hourly FEG. I noticed that on ES, we completely repriced this. On NQ, we didn't. So maybe, I mean, this is what I'm going to think to do. Maybe ES does not take out this low, and then NQ does. That would actually be ideal for me. So yeah, we have about 4 minutes till the open. I'm going to remove this. Oh, yeah, I'm kind of excited. Doesn't look too bad. I do like that we paused before CPI high on NASDAQ. And depending on how we react to that, we might end up going higher, right? So I'm going to remember that there's a 4-hour FEG there as well. Because after you take a swing high into, what I look at definitely is after taking a swing high, this is liquidity. There's like a liquidity void here because we didn't reprice here yet. So this is potential buy-side liquidity to get ran later, and we didn't hit it. So I'm kind of looking at that at the open to get involved. Yeah, so we have open in about 3 minutes now. What I'm going to do here, probably just going to go on the 1 minute now, because I did mark out everything pretty much here. Yep, we're going to just watch on the 1. So we have, oh yeah, what I wanted to look at was these lows, right? You can see ES completely repriced here in the hourly fair value gap. NQ did not, so I'm going to look at whether or not we take out these lows on the NASDAQ. And then maybe we don't on ES. So yeah. Right there. We got the open in 3 minutes, you guys. What are you guys bearish or bullish on the day? Type it in the chat. I'm actually interested to see. I'll read it. Market, I see both. Did I bring the money gun to Florida? Yes, I did. But we'll see. We need to get a banger. This thing will go off if we get a banger. I see both. You guys want to know my fib settings? You want to know how to customize it? I'll let you know right now, actually. So you can go to fib. Yeah, we got a couple of minutes. By the way, if you go to indicators and you click drawing tool, then that gives you this nice little pop-up here. So, a little tutorial in the meantime. Indicators. You scroll down to D, drawing tool tile, and then you could choose whichever drawing tools you want there. I unchecked a bunch of them. And I just clicked fib retracements because I don't really care to have extensions also. It just means I have to click another one, and I just included those a negative percentage on those retracements, right? So get the open in 1 minute, but I'll double click for you guys and let you know what my settings are. My mouse is acting up right now. Oh well. I just got a little ding in my ear. The open is here. This is the open, you guys. I gotta get back into that, but there's that. Let's see this. How large is this 1 minute candle? Okay, so far 23 minutes, 23 bars to the downside. Okay. Oh my God, I'm just like clicking all over the place today. All right. Okay. I'm just gonna put up another window now. There we go. Gotta clean up this chart. Okay, finally. Okay, we didn't take out any stops so far, you guys. I'm not really looking into getting in anywhere right now. Okay, I can just go to drawings and remove it because I'm just gonna redo that. There you go. This is the open. We just came into this just 1 minute FEG. We have nothing really crazy going on right now. Let's see. Go back here. For those of you guys who weren't here yet, I definitely am looking at this low. To possibly get ran. Wait, not this one, sorry. This one. For more bullishness. Okay. Let's go back to the 1 minute. Yeah, right now we're just, we didn't take any liquidity. And we're just popping up right there. So, not really loving that for more bullishness right now. Because there's no manipulation. Okay. Go on the 5. This is the 15 right now. We came into this 15-minute order block, so it is just super bullish at the moment. This ES just took out the Friday's high again. Okay. Not too bad. No manipulation. These are CPI highs, so I am keeping that in mind at the moment as my draw on liquidity. If it just heads towards this without me, then whatever. I'll have to wait. Gotta stay patient. Okay. Yeah, we didn't really do much. On the hourly, we dipped here and then just retraced during the open to previous hourly open. On the 4 hour, just remove that one. On the 4 hour, you guys, on NASDAQ. Close to the CPI high now. If we hit this without me, without me getting a long, then I'm just going to wait for the reaction there and see if we're going to have continuation higher or potential just reversal back in the range. There we go. We had that hourly dipped back into here. And then the 5 minute, did we have a 5 minute bullish shift there or what? Yeah. Okay. So that's what I'm looking at too. Look. This. I drew this out. Retrace to it here. the hourly, and then we had a 5-minute push up again, and we had a deep retracement, OTE retracement here. So some people would have just long there. I wouldn't, because this is just a, like I said, potential liquidity pre-market low. Also, this is like 8:30 wick low. That's why I don't want to do that either. So at the moment, nothing. Wait. Let me do that. Okay. ES took out pre-market high. That's going quickly towards CPI high. So right now, let me mark out the first fair value gap of the day at least, because we are just looking quite bullish there. See, right here. Yeah, this is 9:30. I'm just looking at the fair value gap created after 9:30 at 9:31 or after. So that's it for ES and NQ. Okay. This was the open. Put in a vertical line there too. So NASDAQ just took out that CPI high. See how that reacts. The first 15 minutes of the day are super bullish, honestly. Like, we just had maybe like one tiny red candle to the downside. Just gonna wait it out. 15-minute, we can look here right now. Really bullish. I'm noting now, are we gonna displace above and close above this on the 15? That'll look good then for more upside. Yeah, it would be nice if we create a 15-minute FEG and then we find a 1-minute structure shift within it to go higher. Yeah, so I really want this, like, I'm just thinking out loud about how I want structure to form. So I'm like, okay, it's gonna take a while to form a 15-minute fair value gap then. Like, it'll take until like 10 or so. But yeah, I mean, we gotta see what's happening here. This 1-minute candle just like went straight through it. How large was that 1-minute candle? $40 points. Okay. ES didn't hit CPI high yet. So in this situation, you could honestly maybe look to long ES towards a CPI high. The six sister approach. Look, NQ left out just a 1-minute FEG and it retraced right into it. It's still looking super bullish. Like, it didn't even, barely tapped into it. All right. Maybe not open. I like to mark out the fair value gap that takes out the swing high, so that's why I'm marking this one out. Okay. On ES, it's kind of like, I'd rather mark that out on the 2-minute, honestly. When there's so many of them in the row like that, it's not as clean. Yeah, I'll mark that out on the 2. I think most people in the chat were also bullish. So far, we got quite the bullish open. I'm definitely going to wait. Right now, since we barely had a manipulation at 9:30, and we're seeing this more bullishness, I'm anticipating us to, just continue that trend higher. I don't really think we're going to come back and take out the 9:30 low again. So yeah, I'm just going to wait there. In the 4-hour right now for NQ, right? Now we're in this 4-hour. FEG in a premium. I want to see us really just like displace through this. I don't really want us to wick above this high if we're continuing bullish, right? And so far we are, right? So we're like maybe 50% through that. I'm gonna put out the fib on that, honestly. Put out the fib. And let's see, actually I do want to see that. From here to here. I just want to look at the 50% level. It's gonna be 69.50. Okay. Okay. Go back to the 5 minute, because that's the 4 hour. They were having such like pretty good displacements there. Okay, I need to stop doing the fib right now. Okay, cool. Let's see from here to here. About like 120 point move there in pre-market. Okay. Nasdaq's just flying, you guys. And ES. ES is about to take that CPI high. Here we go. Let's go back to the 1. Nasdaq here, yeah, we just had this tiny little tap into it, that FEG that broke the high. Pretty incredible. And now that's a pretty good displacement above the CPI high. I have to think about what I want to do next for this. Let's see. Let's put up those standard deviations again. I am anticipating ES to take out this high also. But for NASDAQ, I think I wanted this. Yeah, this is my next level. Right here. Little nice 1 hour FEG that also lined up with 150% extension. See that? All right, the 15-minute candle is about to form, so I'm looking at how this is going to form. Is this going to close above that or not? I do want it to close above. Honestly, it would be great, and then we can look for maybe a retracement into that point of interest again. We'll see. How much should we move off the open so far? See what the range is for the day right now. 163 point range for the day right now. Okay. Okay. Here we're coming back down again. We're going to see at 9:44 what's happening. How this first 15-minute candle of the day is going to close. It's still looking quite bullish, but I honestly, ideally it closes above that CPI high and that we create another, like a 15-minute FEG, then you have an order block and a fair value gap. Like I said, I don't really love that we didn't take a manipulation at the open, but it's showing that it is super bullish then. So, gotta just continue following the structure. Hourly is bullish, 5 minutes bullish. see, 160 points on the day so far. It's not even that large of a range yet, so we got more to go. I'm not feeling any kind of FOMO or anything. We're just letting it open. All right, this is the first 15-minute candle the day is formed now. So it did close above it. That looks good. Yeah, I'm liking this, honestly. Maybe we come back into this order block. I'll make sure I'm not going to be like too eager to buy just straight up into here. I'd rather wait for some kind of reaction and then enter. So let's see. ES is almost at that CPI data high now. This is the first FEG of the day right here. That's what I have marked, and this is an hourly one. We didn't run any pre-market lows. We just dipped a little bit and just ran pre-market high and CPI high for NASDAQ. ES has yet to take that CPI high, but it's very close. So we'll see. This is the previous CPI high. Maybe we'll take out this little low. We'll see. 947. Water. Pretty strong first 15-minute candle of the day, though. Let's see. It's close. Yes, it's very close to that CPI high. NASDAQ starting to retrace a bit. You guys, this isn't even like this FEG that broke that CPI high is like in a premium of the leg, so I'm not gonna just buy there if I'm bullish for more action, right? I want to see honestly what the next 15-minute candle does, so to see if we create a 50-minute FEG there. It would be nice if we do hold up here, and then maybe we'll get another dig to go higher. But if we just kind of reverse from here. For me to go lower, I would need to see a 15-minute break of structure or 15-minute change in state and delivery. So like I'd want this to close below the first 15-minute FEG of the day, honestly, for me to switch, but I'm still bullish at the moment. We could just retrace into like OTE, which would be here. Optimal trade entry, which is like the golden pocket of the fib between 62% and 78%. So we just ran through, I think it's about to invert this little, FEG there. So just waiting. Next 50, we've had a little bit of a reversal there. The last three candles on NQ, let's measure that out. Probably like 70 points or so. Yeah, 75 points. Okay. It would be crazy if we retrace all the way down to here. Or if we wick this and then continue up higher, I'll go get in on that market structure shift, honestly. Let's see. But again, I'm not rushing this. We just get nothing, then whatever. It's a Monday, no news. Let's see. Also, like if I'm right on the direction, there's plenty of time to get back up to here. So this this is why I wait, is because we took a swing high. We took that CPI high. So then I like to wait. I'm not going to get in straight up on the retracement here, just like I didn't get in on the retracement pre-market or anything. I'm fine with it taking that high without me. You can see it's digging pretty deep. It's digging into OTE of this. I think now that's not going to be a 15-minute FEG, right? Yeah, we repriced there. We have a 5-minute. But we retraced a lot just now. Yeah, we retraced a lot, you guys. We'll see how it closes. Honestly, if it closes within 50% of this candle, that still looks good for bulls. So, okay. We retraced into, yeah, we retraced into this optimal trade entry so far for NQ. For ES, how much did we retrace, you guys? Let's see. We didn't even get to 50% yet of that leg. So ES is structurally a little bit better here. Really nice reaction on NASDAQ from here. We'll see if it runs through this, makes an inversion. I'm watching this. See if it runs through that, because that was a large displacement to the downside. If it gets eaten back up, it will look good, but right now, let's wait for that candle to close. Yeah, ES is looking better too. We did invert that, you guys. Is it 950 to 1010? Okay. There's a 950 macro going on right now. Okay. I honestly prefer to see a structure shift. So I'll see if it breaks this high up here. So far it's decent. I don't need that fib anymore. See if we break over this high, you guys, of a displacement, then I might enter something. All you got is like the 5-minute retracement though. Let's see 5. Yeah, I came back on the 5. You had like how many swings on the 5 right now? Like 1, 2, 3, 3 legs to the upside. On the let's go to the 30-second. This market's moving kind of fast, so I'm okay with going on the 30-second right now.
I'm back with you for now, Tanya. Great job navigating so far this morning. Going into the 30-second chart now, huh?
Yeah, I am, because I'm just thinking about it. We retrace on the 5-minute, then if it's a 5-minute point of interest, I'll look at the 30-second. If it's a 15-minute point of interest, I'll look at the 1. And I just thought about how I wanted like a 15-minute fair value gap to get created there, like a displacement there to look at, and it didn't. It just because we had quite a retracement there. So I switched to the 30-second, and what I'm looking for is a structure shift, which is a swing high getting taken out with a displacement. And there's nothing yet right now on the 30-second either. Like the last swing high is here. So that's why I'm not entering anything yet. I'm still waiting for more confirmations. It's just tough when, we didn't get any manipulation yet, right? So I don't really want to enter without confirmation and without a manipulation. So we're waiting.
All right, cool. Love the patience. We're going to take a quick break. We're going to go to Tracy Shuchart, our senior economist, when we get back for some market-moving headlines and possibly a trade coming in for Tanya. And don't worry, if a trade comes in for Tanya, that trumps everything. It's like a Trump tweet. It's once Tanya's ready to go for a trade, we'll be right back to live. So hang tight, everybody. We'll be right back.
Pulse, the latest innovation in real-time market sentiment analysis, exclusively from NinjaTrader. With Pulse, you can see in real time how traders are positioned across key futures markets, including the E-mini and micro S&P 500, the E-mini and micro NASDAQ 100, the standard and micro crude oil, and standard and micro gold. Each symbol has its own visual gauge, showing the percentage of NinjaTrader users holding long and short positions. In addition, Pulse displays the average entry prices for aggregated long and short positions. The needle on each gauge also marks the extremes achieved during the trading session. Available on both NinjaTrader web and desktop platforms, this powerful tool allows you to measure market sentiment with data derived from our own customers' trading activity, tracked anonymously to protect trader privacy. Now you have your finger on the pulse of a bit of real-time market sentiment data, giving you unique insights to help make better, more informed trading decisions. Pulse is live now on the NinjaTrader web platform in sim mode and will be coming soon to our desktop platform. Take control of your trading today with Pulse, exclusively on NinjaTrader.
Experience the all-new NinjaTrader mobile app. We listened to your feedback and designed it with the power and simplicity a modern futures trader needs while on the go. Analyze trends like never before with automatic y-axis scaling and over 40 built-in and hundreds of downloadable indicators. Execute trades confidently with the redesigned Superdome, optimized for precision and speed. Make informed decisions with real-time insights into how market movements may affect your portfolio. Monitor and manage your trades either at home or on the go. Available now in the App Store and Google Play.
Hope you guys are enjoying the launch of NinjaTrader Live on St. Patrick's Day. We're going to go right back to Tanya in just a moment. I know it's been a light day. It's been really somewhat busy, I think, a little bit in the NASDAQ, but overall light headlines. But we're going to go to our senior economist right now, Tracy Shuchart, Shy Girl. Shy, any market-moving headlines or anything we should be keeping an eye on right now?
Not really. It's been really quiet. We haven't even seen any more headlines about what's going on in the Red Sea with the Houthis in Yemen. We know that President Trump will be talking with Putin tomorrow, again, to try to get some sort of ceasefire deal going with Ukraine. But aside from that, that's not a whole lot going on right now.
All right, everybody. Well, I think is everybody just hungover from this weekend? I know today's St. Patrick's Day, but it's like, it feels like a market hangover from Friday too. A little grindy, higher. I got to tell you, Tanya, it goes back to, again, seeing you in person. The way your personality is, you are exactly what these retail traders out there need to see and understand about how to handle themselves on a day like today. It's rollover and everything, and so yeah.
I think I think Pac said he doesn't even like to trade rollover. He just doesn't even do it, right? Yeah, it's a little trickier. I mean, I've been waiting for my confirmations. They're not coming at the moment. I'd marked out like a swing high on like the 30 seconds, not even breaking that. So it's retracing deeper now. We're still within the first 15-minute range of the day. So yeah, I mean, I took a flight yesterday. I'm not hungover. I took a flight at 5 a.m. yesterday, and I got my sleep last night. And yeah, I don't know. It's just we're pulling back again in the NASDAQ. We're not really doing much. Honestly, I thought the first 15-minute candle of the day was going to set up for more upside, but we do not have that right now. We're just literally in the middle of the range. But yeah, would you say I'm the same in person as I am online?
Oh, absolutely, 100%. I mean, your demeanor, and it's funny meeting you yesterday and just us going through everything. It's calm, cool, collective. I mean, that's the way I would describe you. But I think that meeting you see how intelligent you are and how much time and effort you put into everything, like watching you work before you go live, I think, and just getting a chance to talk with you. Really, it shows me the attention to detail that you have and how much time and effort you've put into this. And so, kudos to you for that. And you can see it in the audience. I know I'm a boomer. Everyone thinks I'm a boomer now, right? Basically, you got my Bollinger Bands and my RSI. You know what? It's worked for me for many years.
Oh no, there are people talking crap on your Bollinger Bands. No, you guys have to behave in the chat.
Yeah. No,
No. I mean, it's funny because whatever, like, different strokes for different folks. Whatever works for you works for you. Like I like that. Like, you shouldn't be just. I think people's like number one issue as a beginner is like they just keep switching strategies to whatever has been working the last 3 days. Oh no, now it's not working. Let me try something else. So, oh, this guy's posting a screenshot on Twitter. Let me try his thing now. And then like, oh no, they can't stand like a 3 loss streak. Let me find something else. You have to spend enough time with one strategy to even figure out if it works for you or even if it works in general, right? If it works, it can work, but then maybe not to your personality. Like for example, I don't like scalping. A lot of people always ask me like, would you scalp? I don't like to do that. I'll trade on the 1 minute, but I don't consider it scalping because I'm holding it for at least like 10 to 15 minutes. That's pretty much my shorter trades. And the longer side will be like a 2-hour trade. But like scalping and just holding a trade for like 1 minute, I just can't do that. It's too much mental energy for me.
Yeah, I mean, and let's face it, over time, I mean, I made a career of scalping in the first 15 years of my career. All I did was scalp the mini S&P. But in these volatile markets, as busy as it is, over time, the machines are going to run you out. I mean, especially when you're trading NASDAQ in a volatile environment. I mean, you're trying for minute-by-minute trades. You have to be super disciplined, super fast, super sharp, and it's hard to maintain that. It's a Super Bowl every day. I mean, that's the way I look at it when you're scalping. But if you can slow the game down a little bit and wait for opportunities that where you could really stick your teeth into, that's where I think the real edge is. And we talk about this all the time. Everybody does on social media, but it's easier said than done because you get it a Monday morning, it opens up, it gets a little busy, and everyone gets click happy. But that's why we have people like you on here setting the tone. It's important. Wait for your setup and execute. Maybe we go back to the charts. I'm just curious to see right now. What I find interesting about what you're doing is like going to the different time frames, but staying still true to your structure and everything. Because I think the one thing is that I find, Tanya, when people go from one time frame to the next, what happens is that they're looking for a trade, right? They're searching for it versus it coming to them.
Yeah.
And so you're not doing that. You're just saying, I need this trigger, this confirmation.
Exactly. Yeah. I'm just looking for that confirmation. I'll have the different lineups, like I said. If it's like I said earlier, if it's a 4-hour time frame point of interest, I'm going to look for a 15-minute structure shift, or at least 5-minute, or especially if it's a daily level. Like if I'm thinking like, oh, we're going to take out like last week's daily low, and then I'm going to look for a reversal. I need that reversal to happen on the 5 because it's such a large point of interest. Like you can get shaken out on the 1 so many times, and that's just my experience. Like literally took experience to realize that, oh, the 1 minute doing the daily is not going to really work out, but waiting for the 15-minute and going on the 1 minute, then it's okay. And it's the highest probability trades when they're all in sync with each other like that. Like, oh, the 4 hours bullish, the 15-minute just retraced, and now the 1 minute is bullish again, and then I'm getting in. And those are like the banger trades, CPI trades. Like, it's someone I remember, I think I saw a comment, someone was like, did she just like enter on the 1 minute like for a 4-hour take profit? And yeah, that's what I'll do. And that's how you'll get those like high RR trades, but along the way I'll take partials and such. So yeah, I mean, I didn't get my little trigger. I was looking for more upside. I was looking at that like swing high over here, and then I was waiting for just another swing high to get formed, and we formed one here. We didn't take it. Now we just took this like intermediate low here by a little bit. I do wonder if now on the 1 minute, are we going to come back into this first FEG of the day, you guys? But yeah, so far this market is, the first 15 minutes looked pretty promising, but now we retraced, had a little tiny bounce, retraced again. So it's not very directional at the moment. We'll end up seeing if it does turn that way though. So I'll be ready for it if it does trigger. But right now, not really much. What's interesting is that I think ES did not take out the CPI high yet. Yeah. So we paused right before it. I'll switch to different time frames all the time. I mean, yeah, we didn't take out the CPI highs yet. So I'm thinking that we are still bullish. We didn't really shift structure to the downside. Like I said, on the 4-hour for NQ, the only way I would want to shift bearish, right, is I was looking based on basically this. Let me move this for a minute. But this high, the CPI high, and then the liquidity void above, sure, that's a 4-hour point of interest. So then I would need the 15-minute to shift lower for me to get involved. And right now we're still holding up on the 15. Like we did this green, we didn't break below this 15-minute candle open, the first 15 minutes of the day. We're still within the first 15 minutes of the day, the range basically. So yeah, I'm not going to rush into anything, but I'll be ready either way.
I'm curious why the first 15 minutes, in the pit we used to call that's the first bracket, but I'm curious, that first 15 minutes, is that just like that initial 15 minutes you feel is important?
I do think it's important, but mostly I was looking at how we had a nice close on that candle, a strong close above the CPI high. So then I was looking for potential continuation, but then I was looking for like a 15-minute FEG to form there, which would mean like a displacement, like another like square I would put up on my chart. And we didn't because we had such a deep retracement, right? So I think, the first 15-minute candle of the day could either like set the tone on the day, whether it's a trend showing the trend or whether it's the manipulation candle, which I like to see the best. I like to see that more. That the first 15-minute candle is the manipulation, like we talked about, like that it wicked below a certain level. This didn't wick, so we're gonna see what ends up happening there. But I like to look at the first 15 minutes of the day.
Yeah, that's what we talked about with Farm. We wonder what he's doing right now. But yeah, I mean, looking for that little bit of a wick lower and then take it back out and grind up. And now instead we had a thrust higher and then back in almost like a consolidation type day is what it's starting to feel like.
Yeah, it is. So on those days, I'm super patient. I'm like, I'm not going to get in unless it's super obvious. Yeah, there's really a Monday with no news is just like you don't want to set the tone for like start off on a drawdown on the week, really, on a trade that wasn't even your intention, right? So we'll see.
Yeah, and it's so funny you talk about you're thinking ahead again, and I think it's really important. Monday sets the tone. If you start off Monday in a potentially down day, psychologically, whether we think we can avoid it or not, we chase a little bit. It's just like all of a sudden, you're like, I'm down because I rushed it. And it's like you can have you ever have one of those days where you wake up, you trip on a shoe, you're banging a knee on the corner of the bed, and you're like, man, is it today going to be like that? I look at trading in a similar way, right? Yeah. And, if you could start off the day, the week in the right mindset, and even if it's a small winner or a scratch or a small loser, you set that tone. And I'm glad that you said that because I think that's extremely important.
Yeah. I'm always looking ahead, honestly, because you have to be so fast trading. Like, you have to be so fast. Sometimes, especially, I'm trading the 1 minute. Which time frame do you typically trade on?
These days, the lowest I'll go is probably really on 30-minute, mostly now, 60 to 30. It's daily 60-30, but I'll look at I look at order flow tools a lot. I noticed you don't. I was going to eventually ask you about that. And I'll use those on a 30-minute or a 3-minute. But that's about as low as I'll ever get. Would be a 3, just to like, okay, I kind of want to see inside the candle.
Oh, okay. So you'll take an entry on the 3-minute.
Yeah, I'll let the lead will be from the daily, and then if the 60 confirms and the 30 confirms, I'll use the 3-minute. Similar to what you're doing. That's why I was saying, like, you keep that same mentality of, okay, what is it that I'm looking for? I don't go to the 3-minute to search for a trade. I use the 3-minute on order flow bars so I can see what's happening. If all of a sudden I see market getting splashed lower and the market's, you see a lot of volume and it's coming into the sell side and I want to be long and it can't push lower, I use that to be like, okay, I can get in. Going back to like trying to find a place to put a good stop is really what I use it for.
Yeah, I totally get that. So for me, I'm always thinking ahead because I have to be really quick on the 1 minute or 30-second. There's been many times on my stream where, there's maybe 15 seconds, 30 seconds that like price is going to an area that maybe I want to take a partial at. And by the time I decide whether I want to take my profit, it's too late. The candle retraced now to like 30 points below that. So that's why I'm always like kind of forecasting and just being ready to handle the next move and being confident enough to pull the trigger as well. Yeah,
that's the differentiator between you're patient and then you're extremely impatient, and that there's a switch there, because, and this is what I think makes trading so difficult, right? When you're manually clicking stuff like that, you're sitting there, you're patient, you're buying time, you're waiting. I see you going through your charts, you're going through your motions, because let's face it, you and I could sit here all day and look at these charts, and it's like at some point you kind of get itchy for an execution, but you got to be ready in that moment to strike and put your stop in, know what your targets are, and it's a lot of waiting till all of a sudden, it's happening.
Yeah, you're literally you're literally a sniper. Yeah, or you're hunting. Yeah, you're hunting. It's essentially, that's exactly what it is. You have to hunt for your trade and be particular about it. Like, imagine if you only had like one bullet. You're gonna wait until like, I honestly don't hunt, but you would have to wait until the deer is like in position and close by you enough in your target so that you're able to, you make it worth it. Otherwise, it's not worth it if you're just you don't want to be a machine gun. You want to be a sniper.
No, exactly. It's funny. I don't hunt either. I'm the guy who pulls my car over in Florida and I go and pick up the turtle. So like I couldn't even imagine, hunting.
Yeah.
But I 100% agree. Like if you get them in the scope and you're looking at it, and it's about the conditions, it's about what's happening in that exact moment. You get one chance to pull that trigger, and if it doesn't work, you've lost your opportunity. But if it does work, you've executed it, and you've waited until the moment where you actually you use that adrenaline and to get hyper focused and do it.
Yeah, I agree. Like you have to be ready for it. So right now, if you're looking at the 15-minute. We had that large candle to the upside, and then now we have an inside bar on the last 15-minute candle after that, right? So not much direction there. And we took out the low of that one. Now we're coming back up into the range again. I want to see whether we're going to displace over this 1 minute high, you guys. And also ES is then going to go towards the CPI highs. We're going to see how that goes. If it starts looking like nice and bullish through that, then I'll be ready to like quickly take a trade. If there's an FEG, but otherwise I won't. And right now we're lagging. I don't really love that. So ES is looking structurally a bit better in that sense. Let's see, on the 15. I think on ES on the 15, yeah, it did dip into a 50-minute FEG actually. That's actually good for us. Yeah.
This goes back to what you were talking about before earlier when we were saying, is there going to be a divergence day, or are we going to see indexes working together? And this is a scenario where you have NASDAQ, you want to be long, S&P is remaining bullish, and that's giving you confirmation. That's a confirmation for you.
Yeah, and honestly, I like that S&P was a bit stronger here. Actually, the S&P left a little FEG there. We tapped into it. We still have CPI highs. So I think it's a matter of time until we take out those highs. We just tapped a little bit into it barely. But I'm waiting. And then if we take it out with a nice energetic displacement, maybe we can get more upside. But like we're stalling again here, you guys. Like I don't love that. I don't love that at all. I would have wanted us to just go straight through that level. So again, just waiting. We're just ranging, which is fine. Like this is honestly, it's fine to do that, and just you're building your patience, you're building stamina, and you're building up like the neural networks in your brain where you're like, okay, yeah, I have to wait. I'm going to continue waiting, and then you're just going to build your discipline over time. And I think it's fine to just be tape reading also if it's a Monday and you don't typically trade Mondays. Just be tape reading it, or like if you're too scared to get in on CPI day, it's still good to tape read it. Then you're literally training your brain to be more confident the next time. But yeah, let's see. We made another swing high there again. I'm waiting to see if we're going to displace through them. Maybe they're creating equal highs for more upside. What I want to see on ES though was a standard deviation here. Okay, yeah, that's like the next target is all the way up there, though. Okay. Yeah, if we displace through this, I'll probably look for even more upside, but we'll see. I'm staying patient. I'm honestly surprised. I thought that we were going to go for this high, like, Friday, you know? Like, I think I was talking about it on Friday. I was pretty bullish. We just, like, swept these other little highs here on NASDAQ and into ES, so I was pretty surprised when I saw in the afternoon that we kind of just paused there. So this market has been pausing on the way up. It makes sense because it's been pretty bearish, strong and fast and furious on the way down. So if it's slow on the way up, I am going to then anticipate maybe a reversal later on in the week. It really depends, you guys. Like, it really depends on the reactions to the levels. I'm never really rushing into it. But yeah, like, still waiting for those highs. You don't want to be eager. This is the worst thing to do is just to preemptively enter without a confirmation. Like that's a really bad habit to form. So I'm always just waiting. Every time I've ever done that as a beginner, I've regretted it every time it became a liquidity because there was no confirmation and there was no manipulation. So guess what? You're going to be the liquidity now. So I do wonder now if we're going to take out this low. I don't know. We'll see.
What are your list of confirmations?
It needs to break above a swing high with a fair value gap somewhere in that leg where it broke a swing high or swing low. And that's basically it. Like, and here we didn't break those swing highs yet. So. And also manipulation is good. So like the fact that we took out this little leg here, that could be a manipulation. And then if we break out over this, that could be a potential, what we call a breaker blocker, a mitigation block. So that could be, or some people would say that's resistance turns support later on. So that's what I'm waiting for. Yeah.
And that all starts off with you looking to be bullish. So you look for that one little mini break where it took out that low, then it came back in. Now if it takes out that swing high, that's when you step in. Now, is that just a straight market order? Are you limiting, or like you just buying in? And then where, and so that's where you said with the strike is, because with NASI, this thing could, what if it just blitzes through it? And then how do you adjust for that?
If it, I'm good. I need a fair value gap, then I'm going to enter there. If it blitzes through it, I'm going to miss it. I'm not just buying the break. Some people buy the break. I'm buying the retracement after the break. So there needs to be a displacement through it, like a fair value gap. Like I've shown like these little liquidity pools there. For example, this one, like a break. Like we broke the CPI high with this before. I would want a retracement. But like I said before, because it was like first 15-minute candle of the day, I was like, okay, this isn't a really premium of the leg. So I'm going to wait for the reaction here. I'm not going to just buy straight in here. It's not a good risk reward for me to enter there. And there was no manipulation. So I'm happy I just waited there. There are some people that might be still long here and they're just waiting. But yeah, I'm kind of considering all those different things. Yeah. Otherwise, I'm just going to miss the trade. I'm okay with missing the trade because then I'll just wait for another swing high to get taken out. Like that's basically what it is. Some people sometimes are like, you're chasing. If you know just relative to structure-wise where your stop is safe, then I don't consider it chasing, as well as if the RR is good. For me, I won't really take anything under like a 1.5 R. Yeah, because then it's just not worth it, the expectancy. Yeah.
So you won't do a 1-to-1?
No, I don't really. Unless it's like I'm very, very, like the probability is really high and I'm very confident it's going to be a quick trade, then I'll maybe do it. But I don't really do 1-to-1s. Yeah, I like 1-to-2s the best. But it's different on every trade, depending on the structure and the target. But yeah,
and that's why you give yourself a range of execution, because a 1.5 gives you a little bit more room with your execution too. Because if you're 1-to-1, your entry better be really good, because if you pay a little bit above the 1-to-1, you're already skewed if it stops you out.
Yeah, because if it's a 1-to-1. You need to have a win rate of at least 50% just to break even. And I think a lot of people, they're going to end up over trading that. And, they can't handle it too much. So I prefer to just a 1-to-2. If you have a 1-to-2, you just need a 33% win rate to break even. Like some of the best traders I know have like a 40% win rate.
Best year of my career was like 30-something%.
Yeah.
So I made a good puck.
Nice.
And it was just because I caught some of the winners I caught just ran, But when you get volatility, I was wrong a lot, but I was, and that's why I think volatility allows for more mistakes, right? Obviously, you don't want big ones, but because the opportunities are going to be more frequent.
Yeah.
Right? When it gets slow, people, there's two mistakes I see consistently. One, when it gets busy, people overtrade and they're not as precise with what they want and they're just trying to partake. And the flip side is when it's slow, days go by and they're patient, and all of a sudden they're imploding on a day where there's really nothing going on, right?
Yeah.
It's hard to find that balance.
Yeah, it is hard. And that's why you have to continue working on that just every single day. Because like you just have to, that's how you forge discipline, right? As a trader, is that you practice the patience, you practice looking at the candles, you practice reading very large daily ranges. Like you practice seeing those 1-minute candles going huge directionally. So that's what we're doing here. We're just on this Monday morning, we're practicing patience, because right now we are still in the first 15-minute range of the day. Like it is now 10:23, you guys, and we are still pretty much in the middle of the range here. In the first 15-minute candle, I said we made like a 160-point move, but nothing further from that. So that's a pretty small range on the NASDAQ. I think recently the average true range has been like 400 points, but this is just what you're going to get on a Monday with no news, and especially ahead of FOMC. So yeah, we're just practicing our patience, honestly, at this point, because I don't really even love the fact that it's taking, even if it goes as displace above this, I don't really love the fact that it's taking so long. It could be argued that it's generating liquidity, but we'll see. It really depends if we do take it out with a displacement or not. But the longer it takes, the less likely it is to happen. So it is quite remarkable here. Honestly, we had a fast 15-minute open. So I'm just imagining all the breakout traders that must be getting frustrated here. Because we broke those CPI highs, we broke the pre-market high, and we have not really left to go higher, right? Mm-hmm.
Yeah, and really, you look across the board here today, there is just really not a lot going on. Natural gas, I think, is the only thing down or up more than 1%, which is crazy. I mean, that thing moves it's like crazy anyway.
Really?
But I mean, for the most part, I look at across the board, there's nothing. I mean, you got bond markets flat, you got gold market flat, you got just really pretty much.
Really, gold is flat. Really? Oh, okay.
Let's see where gold is right now.
Gold hit 3,000, right?
It's up nothing. It's up a few bucks.
Okay.
Yeah, I know, Chad. They're asking if there's no trades. No, because there hasn't been a setup yet.
That's okay. Those are people just like rolling in. Yeah, I get
exactly.
it.
Yeah. I mean, it's important that we showcase the fact that look at
trading is 90% waiting. It really is.
For me, even these days, it's like even so much even longer. It's crazy.
95%.
Like, I know.
If you're a higher time frame trader, it's like 95% waiting, and then the rest is executing and holding. But yeah, you guys look now. We're just retracing again. Yeah, type in the chat whether or not you took a trade yet to get today. I'm also curious. Because honestly, I wouldn't be surprised if a lot of people also didn't take the same any trade, especially if we trade the similar kinds of concepts.
And interesting. We're gonna have Jim Cagnina come back on just after the 10:30 hour. What we look at with Jim is he uses Edgeful stats, and one of the things that's interesting about Edgeful and like just stats in general is that stats don't equal edge. But if there's something out there after he looks at the initial balance stat on Edgeful. Do you look at the initial balance at all?
No,
right? Isn't it funny? There's just different languages for all these different things, right?
Yeah.
Like, it's just, and it's. I like the first. A lot of people will look at this first hour, and I'd be curious to see what the stats are on that, just because it's basically was the initial move, and since then it's done nothing.
Right.
And so we will bring in some stats.
I'll learn something because I don't really even. Yeah, I don't look at that at all.
I don't either.
Really. I'm more like a pure structure. But yeah, I'm interested to see what he has to say then, because we haven't really moved. Still in the first 15-minute candle range.
I'm going to show my charts just for a quick second. I want to show people what I look at.
Sure.
And something that I think is super simple is what I look at is when the markets are expanding out of a range are the Bollinger Bands. Here we go with the Boomer Bollinger Bands. I think I don't even know. I'm not a millennial. What am I?
Boomer Bollinger Bands.
Yeah.
Maybe you're Gen X.
I'm Gen X. That's right. It's bad. I don't even know. But when markets are moving outside of a range, I always look for expansion. If I see the top Bollinger Band going open like I do here on the 60 or the 30, that just tells me we're in range expansion, and I just know just to stay directionally that way. And, if we start to pull back below like where this crease is and we get back in here, then I know we're rangy. So right now what's happening is it's just showing me we're a trend high. It's a trend day. It's basically like we're just grinding up. And this old Bollinger Band peak is an area where I think we can go. This morning I talked about 40 or 56.79. And it's just a simple thing, but I look at it and go just not to fade it. I mean, that's if there's anything it tells me that, is that's something I look at more than almost anything in all of the years I've tried to build indicators and do stuff, is like I want more things to keep me out of trades than I necessarily need. I'll find ways to get in, right? And so I look at things and go, this is telling me just don't be short right now. And that's why I'm kind of interested to see what Jim says about the initial balance and stuff like that. Well, yeah, we can go back to Tanya's chart. But I just want to show that because I think it's just such a simple thing that keeps me, in check. Because Delhi needs to be put in check because I was the overtrader. It was pretty.
I think everyone was an overtrader at some point in their career. I think like everyone goes through that same trial and tribulation where you are fighting yourself. Basically, I think it's a very common issue. I just remember, I would try one, especially if it's the same trade idea on the same time frame, and you're just looking for a different entry model now. That's really not the vibe, you guys. That's really not the vibe, because you're kind of already you're kind of married to your bias in that sense. I would need like another reason to get in other than it's just a different entry model. So here we are, we're coming back down into like the first FEG of the day. So we really are like pretty much took away like almost all of the gains of the first 15-minute candle of the day so far. We'll see the reaction there for NASDAQ. ES, sort of in the middle of the range now. Probably about to take out this low. But yeah.
And they did it right at the end of the hour. And also what's interesting on rollover, everybody, is that when you get towards the end of the hours, I go back to today is a day, last week is a week, where when you really need to look at times a lot, because a lot of these orders, and I know it kind of sounds weird, but at the end of hourlies,
yeah,
there's a lot of timed orders out there.
No, that's why a lot of the times I'll look at from the last 10 minutes of 1 hour into the next 10 minutes of the next hour as an area of potential, like a time window to execute. That's what we call like macros. But because there's a lot of orders, and like that's the opening of the next hourly candle as well. It's getting introduced there, and especially when 11 a.m. That's a London close also.
Yeah.
So that's why I really love the 10:50 to 11:10 macro.
Interesting. Yeah. And then you have, and like on rollover, it's like, there's orders that are sitting there going, look, we've got to sell them now. And they just come in and they hit the tape because we're in roll and you're moving from March.
Right. They have to roll over their positions. Exactly. Yeah. There's not even choices. They're looking for levels to get in and out.
So coming up next, I talked about this. I think we're both going to learn something. Jim has really worked a lot with Edgeful in these tools. I'm curious to see what he sees from the initial balance from that. So we're going to take a quick break. Tanya's not going anywhere. We're going to come back with our senior market strategist, Jim Cagnina, and we're going to go over an edge report. So hang tight. We'll be right back.
All right.
Pulse, the latest innovation in real-time market sentiment analysis, exclusively from NinjaTrader. With Pulse, you can see in real time how traders are positioned across key futures markets, including the E-mini and micro S&P 500, the E-mini and micro NASDAQ 100, the standard and micro crude oil, and standard and micro gold. Each symbol has its own visual gauge, showing the percentage of NinjaTrader users holding long and short positions. In addition, Pulse displays the average entry prices for aggregated long and short positions. The needle on each gauge also marks the extremes achieved during the trading session. Available on both NinjaTrader web and desktop platforms, this powerful tool allows you to measure market sentiment with data derived from our own customers' trading activity, tracked anonymously to protect trader privacy. Now you have your finger on the pulse of a bit of real-time market sentiment data, giving you unique insights to help make better, more informed trading decisions. Pulse is live now on the NinjaTrader web platform in sim mode and will be coming soon to our desktop platform. Take control of your trading today with Pulse, exclusively on NinjaTrader.
Experience the all-new NinjaTrader mobile app. We listened to your feedback and designed it with the power and simplicity a modern futures trader needs while on the go. Analyze trends like never before with automatic y-axis scaling and over 40 built-in and hundreds of downloadable indicators. Execute trades confidently with the redesigned Superdome, optimized for precision and speed. Make informed decisions with real-time insights into how market movements may affect your portfolio. Monitor and manage your trades either at home or on the go. Available now in the App Store and Google Play.
All right, we are back live, I believe. Now, Anthony was mentioning Edgeful, and coincidentally, in a little bit later on this morning, we are going to have the CEO and founder of Edgeful with us for a good 45 minutes. So it's going to be good. You know, the software, the website, edgeful.com, spelled with one L at the end, is really a feature-rich data tool that helps you develop a bias and get some insights, not only from a time frame point of view, but also from a daily point of view, right? So just kind of a simple one of their simple reports I have up on the screen right now. We're looking at a E-mini S&P 30-minute candle chart right now, and the white lines here are going to measure the initial balance. And let's just kind of talk about the difference between the opening range and the initial balance. And these are terms that, you know, different traders might define differently. But for our purposes, we're going to talk about the opening range as a 30-minute chunk of time. The bell rings in New York. Trades happen in 30 minutes. You get a lot of institutional participation, right? Then there's another half hour, right? So that whole first hour after the bell rings, we're going to call the initial balance, right? Particularly for the stock index futures. And you can see here we have the white lines kind of outlined the highs and the lows, right? And that was that first 30 minutes. Now the second 30 minutes is within that area, right? This is the red candle right here. So as an example here, I have a little stat on the screen. It's called the initial balance breakout. And I look back three months, right? And I said, okay, how often does price break out of that initial balance on a Monday, based on statistics from the last 3 years? Now you can go back 6 months, you can go back a year. It's very customizable. You could even pick your days on a calendar and get the stats, right? And so what the result was for a Monday for on a 3-month look back was we'll have a single break of that initial balance, either up or down, 83.33% of the time, right? We'll have a double break, only 8.33%, meaning price will go above the white line at the top, right? The balance, and also go below at some point during the session. And then we have a 8.33% chance of no break, right? Of no break. And so, the odds are against no break, right? So I'm looking at this and I know my bias is bearish, right? Excuse me. I know the average true range has been about 106 for the E-mini S&P front month. And I know that we've only gone 75 points so far, high to low. So now what I'm thinking is, all right, chances are we're going to have a single break, right? We're either going to break above 56.74, or we're going to break below 56.32 based on the probability, right? It might not happen. We might hit that 8.33%, but I'm ready for it, because if we do break up and out, I see that our ATR is only 75. We have, 20, 30 more handles possibly to the upside if I want to be bullish today. Alternatively, if I want to be bearish, we got a long way to go to get down to this bottom part, but it's certainly conceivable. It's a long day, right? You got to take into account macro factors, news, unplanned news, and all that stuff. But this kind of helps me with my bias, right? It helps me with what's the probabilities that we're going to stay within that range. So a trader might say, well, I don't want to get short at the top of this range at R1, because it's most likely going to break out. Again, it might not, right? It might not. Past performance not indicative of future results, but it's very possible that it could. So that's one feature, and we are going to have the CEO of Edgeful. He's going to come and do some demonstrations and talk more detail about that. So let that pop up. Oh my goodness. All right. So we only covered this. We'll catch up with some more markets in a couple of seconds. And we also have hot commodities with Tracy coming up. So let's go ahead and take a super quick break, and we will be right back.
All right, everybody, that was the quickest break in history, because we're going right to Tanya with market action. Tanya, Close us out into your 11 o'clock hour before we get to hot commodities.
Like we just did. We didn't break that swing high, which I was looking for confirmation for bullishness. Came back down, you guys, into that first presented FEG of the day, and NASDAQ took the 930 low, right? NASDAQ made a new low of the session. ES did not. ES probably retraced into about 50% of that range just now, and it took this this little intermediate low, but I'm definitely not looking bearish yet, because on the what I wanted was a 15-minute market structure shift then. We did not close below that 15-minute opening candle to institute even a change in state delivery. Never mind like a swing low. The swing low, we did not close below it, and we did not create an inversion or anything. So, you know, right now it's still not looking bearish to me yet. We have a divergence there now where NASDAQ took that low of day, low of the session, and ES did not. I wonder how much ES actually retraced there. So I'll do a little fib. We did come into 50% of that leg from the first 15 minutes up. You can see that ES is stronger than NASDAQ today. And it's so interesting. You know, we did not take out that CPI high yet. So we have this little, honestly, it might be a 15-minute candle. It's 1 minute structure shift. Didn't take out that high yet. It's possible that this might be even a, let me see, on the 15. Honestly, it doesn't look too bad for an ES long to CPI high. But I just don't really love. What time is it? It's 10:42. See? We broke that swing high here, and we have this. So I might just get in, honestly, guys. I might try a little scalp. I mean, not scalp, a little short-term trade from there to there. Let's see. Did not enter yet. Looking at this here, I might enter now. Okay.
Order filled.
I'm trying that, you guys. I'm on the micro ES. Let's see this right now. I'll pull it up. I got filled. So I'll just pull up that next to the ES, but I'm looking for us to go towards that CPI high. My stop will be this low, because I do like that we took it.
Order submitted.
We took out that low, and we had a divergence there. So let's try that. I'll just go for a new high of day, honestly. So I'm long ES because it's, like I said, it was stronger structure. So far it's working out decently in my favor. It's up 4 points. So honestly, let's see this RR. I'm risking 11 to make 13-ish, 14. That's not bad. It's like a 1.5-ish. So I wanted to hit CPI high. Like, you could hold for that. But, I mean, even just hitting this high is good enough for me, honestly. You see what I'm talking about? You had to be quick with this. I was like, wait a minute. And then we broke this short-term high here with an FEG. So we'll see if this ends up working out. Like, so far it is really good. I'm watching here if we displace further. And this is MES on the right side, because I'm just going to take micros, but I like to analyze on ES. I'm really watching here if we're going to have a displacement above this. If we don't, then it's going to be like, bleh. I might even just put a stop to break even quickly. I don't really want it to retrace again. It's 10:44. We already displaced through here. This is actually a breaker. I could put my stop there. Yeah, we dipped once into it. I just don't love that we're not displacing further up now, but we'll see. It's slowing down. I want it to start ripping up here soon. But it is a good sign that, you know, about 2 minutes into the trade, I'm up. But we'll see. What's NASDAQ doing? NASDAQ is here. That's coming back down to my entry right now. Don't really want to hang around by my entry too long. This is permissible, but like, like I said, I'm not really loving the action today. We're in a SIBI. I don't really like it. I'm gonna close out the trade, you guys, just for 1.7. Wait, we'll see how this candle closes. I'm waiting. Yeah, I'm putting stop to break even. Yeah, I got stopped at break even there. It's just, I wanted it to quickly go towards here. So we'll see right now. We'll mark this out again. This little FEG. On the 1 on ES. Let's see. It's 10:46 though. Anyway, I'm marking this out on the 1. I'm waiting until this candle closes. We're gonna see what happens here. On NQ, it looks decent. It's just so slow. All right, I'm gonna re-enter now. I'm re-entering, you guys. Put my stop. What was it? It's like the putting my stop here. This is the breaker block. Yeah. Alright. I realize it's not 10:50 yet, so I think that this could potentially move up from 10:50 to 11:10. So let's see. It's taking its sweet time, though. I will say it's taking its time. Risking, yeah, more of a 1-to-1 at this point now, but it's fine. I'm okay with putting my stop here, because this is where 3PD arrays fail. It's a FEG, it's an order block, and it's a breaker block. So then I'd be wrong. But now, what was it? I feel like I probably got out of that trade a little bit prematurely on that stop at break even. So I'm okay with re-entering again. And I'm okay if this takes me out. Let's see. NASDAQ is holding up. Quite slow. But it's about to be 10:50, you guys. I do think maybe we'll have a move now into those highs from 10:50 to 11:10. Let's see, I'm back at the break even, came back to my entry right now. Let's go for a new high of day, or CPI high would be great, 75s, but I'm just gonna go for a new high of day. Or even this little high would be decent enough, honestly. Well, once it hits this high, I will put my stop break even, because I don't really want it to hang around too much here. Because then it would be taking out a swing high. But honestly, I've been in this trade now for like 3 minutes, 4 minutes, decent. We're like been just break even / slight profit, so it's not too bad. Kind of slow, but we'll see. I would give this until like 11:10 to play out, probably. Yeah. See if it digs back up into here again. It would kind of suck, but whatever. Yeah, this is a 1050 macro right now, you guys. Let's see. 1050, 1110, longing the stronger asset. 15-minute point of interest, 1 minute shift, 1 minute FEG. I longed in it first, and then I actually put I choked my stop too quickly there. I admit that. So then I re-entered, and here we are. This is where 3P areas would fail. It'd be here, 53.50. You could put your stop here too, but I don't really want to be caught into such a retracement down to here. So far you had 1, 2, 3 times. This is the third time now we're coming into this FEG. I don't want it to really stay around here for much longer, but we'll see. I'm okay with getting taken out too. I'd rather just take the risk. See there, 1050. Digging into it. I'm in a bit of drawdown now. It came close to my stop, not even, but it did not take me out. It became like 2.5 points within my stop. We'll see how it reacts here. I don't really want it to invert this. Decent. Don't really want to stay here for too long. We'll see what's NQ doing. Is it like looking really weak? Looking okay, actually. The NASDAQ looks okay. She might dig deeper, but we'll see. See you guys. We might just fail here, then that's fine. Then honestly, we're leaving those highs for another day on ES, which would be really interesting for later. I'm fine with that. Maybe that's an area for FOMC. But I'm still in this trade now. Now I'm kind of in slight drawdown, so this is a pretty slow trade. I'm not really even loving it. It's 10:52. I entered this trade at like 10:40ish, right? But you kind of anticipate that. 10:43 was my first entry, so I'm gonna calculate from that. Then it's like a 10-minute trade so far. Pretty slow. Kind of makes sense though on a day like today for it to be a slow trade. So let's see, I entered 10:40. We'll see by 11:10 or 11. That's when the segment ends. We'll see if it ends up taking this high. But so far we're coming back up again. So it looks somewhat promising. We'll see. I want it to displace above this high. Ideally, the last swing high. So far it's not. It's like getting pushed down from this bearish FEG, so it's not really looking too good, but I'm gonna let that candle form. There's about, okay, digging up again. Going lower, you guys. I'm probably gonna get stopped out because it's digging again right now. Oh my gosh, it's like one tick away. Put me out of my misery. Has that happened to you guys before? It literally got one tick away from my stop right there. What's NQ doing right now? It's literally now or never for this to get either stop me out or reverse. So we'll see. We shall see. It's not looking good for me. Oof, stopped out, you guys. Oh well, took that one. We're really still just in this range again for ES. Wanted to see if we were going to break out towards the new high of day. And we just retraced really slowly again, so L's. Here we are back again in that little low there. So let's see here for NASDAQ. And NQ. See, NASDAQ going towards new low day again. Pretty choppy market there, but worth a try. So when something like this happens, I'm honestly going to mark out these highs again later in the future, so it's not even a big deal. And yeah, that was my one try going bullish this morning. Didn't work out. That's fine. But I'm not going to try it again. We're just wicking this low again on NASDAQ. So we could just slowly drop lower. I'm not really going to get involved with that because I want displacements lower. So yeah, I mean, I tried one trade, you guys. Took the L. It's a Monday. You don't want it to... what you don't want to do right now is revenge trade, right? So we're still just wicking these lows. There's not really more continuation to the downside either. So I'm not really interested in going flipping, right? Because sometimes I'll get stopped out where the market structure shifts, and then I want to flip the bias, but we're not really doing much today. So that was my one bullet of the day. And yeah. Too bad. NASDAQ took out this low. We got a little bit of an energetic shift there. Tried this. Stopped out.
Yeah, I'm back in here with you, Tanya. I mean, I like the setup. You handled it well. Again, stayed true to form, which is extremely important.
I'm happy I found a trade at least. Yeah.
Yeah. No, I understood the setup from the beginning. You know, it's funny. I was watching you all day, following everything that you're doing.
Mm-hmm.
And the trade made a lot of sense to me. And so, again, appreciate you coming down here. I mean, what a blast having you here.
Yeah, I'll be back here tomorrow too.
Yeah,
right?
You're going to be back here every day till Thursday. We're going to be together every morning. And
yeah.
So yeah, until then, everybody, of course, if you're following us on NinjaTrader, make sure you stay tuned for what Tanya is doing on her YouTube channel as well. And she will be in here with us every morning on NinjaTrader Live. Next up, we're going to be hearing from our senior economist, Shy Girl. We're going to be hearing from Jim Cagnina, our senior market strategist, and they are going to be going over hot commodities. This is such an important segment, everybody, especially times right now where the indexes might start to get consolidated and choppy. You want to see what Tracy and Jim are seeing in the commodities. And so let me hand it over to you guys now. I'll hand it over to Jim and Shy for hot commodities. And then Jim has a special guest of Edgeful, which I'm looking forward to that as well. Andre will be there. So, all right, Jim, off to you, buddy. Have a great day, everybody. I'll be back tomorrow. I'm out with Tanya for now. See you guys.
All right, we are back with Shy Girl. Shy, how are you?
I'm doing good. How are you doing?
Pretty good. I'm just still so jealous that I'm not down in the studio because it looks so cool.
I know we missed you, but you'll have to come visit soon.
I can't wait. So we have some hot commodities markets moving today. A lot in the energy area and then other places as well. What are you looking at?
So I wanted to take a look at oil. What's interesting is we gapped up on the geopolitical news, the Houthi news, hit new highs overnight, and then now it looks like we're headed towards filling that gap. So a lot of moves, a lot of intraday moves, overnight moves for traders. A little frustrating for swing traders.
Yeah, I mean, there's so many, but so right now I'm looking at the May contract because I think last week we were trading April maybe as the front month. It seems like all the volume now is in May. So I have a May 30-minute WTI chart up on the screen right now. And it's, we talked about that opening range, initial balance breakout on the downside, and we had a pretty big candle break down almost all the way to the pivot just now.
Yeah, so it looks like we're going for, I'm actually on the April contract, but they both gapped up on the Sunday night open. So it looks like they're going to fill the gap.
Okay, I gotcha.
Let's go ahead and, you see what I mean?
Yeah, yep.
We have, if we go look at gasoline's been a bit stronger, I think, because a lot more product goes through those shipping lanes, goes through the Red Sea, than necessarily oil, and we import Middle East products that have to go through there to the East Coast. So we are seeing gasoline a little bit stronger than oil today, and it's been a little bit stronger for a couple weeks now because we've had some refinery outages as well. So
makes sense. I mean, we see
it. Like to you?
Yeah, this looks a lot more stable than the WTI market right now. We have a nice point of control with a lot of volume established around spot 1776. We're kind of moving off of that a little bit, but R2 is kind of really providing some nice support right now around 1687. From a retracement point of view, I have what I call a session fib retracement on the screen right now. I'm using the bottom of that very first wick that we saw last night, and we're just hovering around that textbook 38.1% retrace.
Right, absolutely. So now let's go take a look at some metals. We have some gold still not moving, but I wanted to take a look at it. And then we did have some movers in copper and platinum, but let's go ahead and take a look at gold first. Again, very surprising this hasn't moved more. What are you seeing there? Do you think we're gonna make another get over that $3,000 hump that we keep seemingly rejecting out of?
All right, Tracy, I think we're back. If you could hear me, let's go. All right.
Yeah,
so we were talking about.
Let's go ahead and
talking about gold.
Gold.
Yeah.
Yep. So what's this looking like to you? Are we gonna get over that 3,000 and move higher from there?
Well, it's an interesting kind of technical setup right now in gold. We have a lot of volume, a lot lower at the point of control, down around 29.95. But we do have some call resistance at that magical even number of 3,000 on the in the futures market, the April contract. And right now we're kind of sticky, right? We had a really kind of big 30-minute candle at 10 to 10:30, and we're just kind of finding price happiness right there. I would be a little surprised if we got above the gamma level JAX 3, but it could be a target on the upside that I would probably start thinking about.
Nice. I know a lot of people are looking for it to finally hold over that 3,000, so we'll keep an eye on that. Why don't I go look at, interestingly, platinum. is doing very well today. Platinum is really more of an industrial metal. I think. I mean, it's under the precious metal groups, but it's really, in my opinion, kind of more of an industrial metal. So nice to see that it's holding strong for today. Probably the strongest out of the precious metals group.
So Tracy, I have a question. When I think of platinum, I think of catalytic converters in automobiles, and we hear all this stuff about tariffs in Canada and Mexico. Is that part of the equation here?
So I mean, I think that fundamentally we have a deficit, and it's a growing deficit for platinum. In addition, the industrial uses are very wide, not only for green transition, but I also think that we're seeing some strength due to the fact that perhaps EVs aren't as popular, at least not as popular in the United States as they were intended. So we've seen a lot of these automobile companies, even in Europe, kind of scale back on EV production. And so I think that's giving kind of a fundamental boost as well to platinum.
Yeah, that makes total sense. I mean, right now we have a pretty good rally going on. We're up to R1 almost on the daily pivot, and we could see previous sessions highs up here with my green line up here, approximately 1022.6. So we wicked up to it. We'll see if it becomes resistance or not on the upside, but right now it's looking a little bit bullish on the day.
And then let's move over to copper. Copper's kind of had a wild day. We were up, and now we are no longer up, or we are up a little bit, it looks like. Sorry, I was looking at European copper. We'll look at HG. Sorry about that really quickly. So we're up on copper. So it looks like we're kind of up on these industrial metals where we're down on silver and flat on gold.
Yeah, I mean, we on the technical side, we're bouncing up against R1 on the upside right here. We did kind of break out a little bit to the upside after the opening range, and we're just trading right at the high vol level for the 0 DTE options right now. And so we might be seeing a high right now. I'm not sure, but we have 1, 2, 3 wick attempts above R1 that's failed so far. So we might kind of gravitate back down to the point of control, which is 4.9080.
Yeah, well, I know a lot of traders looking for copper to get over $5 again, so we'll keep an eye on that. Fundamentally, the fundamentals on copper look extremely strong as well. So even though we are having some recessionary fears, and speaking of a slowdown of economies because of these tariffs, but the fact that copper has remained strong with this overriding recessionary attitude kind of speaks volumes for where we are at as far as supply and demand.
So I read something this morning, and I can't. Let me just ask you another question on this. I read somewhere this morning where the Chinese economy might be doing better than anyone thought, and if that's true, who knows, right? Who knows what's true coming out of there or not? But if it's true, right. What would we expect to happen with prices for copper?
So I think you would have prices go higher. We did have a little bit of stronger data overnight that's starting to look promising. We know that China is very concerned about the economy. They've kind of been dealing with deflationary pressures for the last couple of years. They've had a housing implosion of that entire market. So it seems that, post-COVID, they just, the problems have escalated. So, but we'll see. I know that they're very worried about deflation. So, perhaps all the stimulus measures they've been putting in place are going to turn the economy around.
Yeah, that makes sense. On the daily candle, I just switched over to a daily chart. We had a double top that was, then we broke through to the upside, and now we've kind of jumped up a level. And when I kind of see this pattern, I kind of draw a rectangle, right? I like drawing rectangles, and this was resistance, and now this is kind of becoming support for me. So when I'm thinking about direction and bias and stuff like that, I'm still kind of in bull mode until, set aside the macro and the fundamentals until we start, having a body of a candle close into that 4-spot 86.15 area.
Absolutely. Well, traders be looking out. Or would you also buy in that area? Or would that be...
Yeah. I mean, right now my bias is bullish here, and every time, I'd be looking for the wicks, right? Because a lot of times what happens is these wicks kind of dip into your area of support, and then buyers just say, no, this is value right here. We're getting in, and pushes us all the way back up. What I wouldn't want to buy into is kind of a breakdown and a close below the rectangle. Then it's like, all right, we're done with that. Let's reconsider our bias.
Excellent. Well, I guess we'll have traders keep an eye on that. Thank you so much.
Yeah. Any other markets right now on your radar screen?
I think that's all I have for today. Really, kind of a slow day. So I don't, kind of a slow day. Maybe a long weekend for people. We have rollover for indices, so we'll keeping an eye out.
Yeah, for sure. We have like another minute before our next. We have a guest coming up in a second, and I have a whole bunch. Oh, the CEO of the CEO of Edgeful is coming on. Andre Arsalian. I'm sure I'm saying his name wrong. I apologize, Andre, if you're listening to this. So he's going to be on in a couple of minutes. But let me get one more quick question in for you. Does FOMC days now? So Wednesday, we have an FOMC meeting. It's high probability no rate hike. And the press conference is always fun. Everyone tries to get you. Is all of that is that anticipation already built into some of these commodity prices?
I think so. I mean, generally, we kind of know what's happening. Everybody sits around. It's like hurry up and wait for FOMC day, even though we know that we're not going to get one of those. We're not going to get a rate hike or cut. And so then it'll be a matter of what are the statement changes? Do they lean hawkish or dovish? And then, of course, if there's very little in the way of information as far as the statement is, then all eyes on the presser and see kind of what the language is and what the questions or how Powell answers those questions.
Perfect. Well, Tracy, I appreciate you. I will talk to you again very shortly. In the meantime, we're going to go to a really quick break, and then we'll get Andre back into the show.
Pulse, the latest innovation in real-time market sentiment analysis, exclusively from NinjaTrader. With Pulse, you can see in real time how traders are positioned across key futures markets, including the E-mini and micro S&P 500, the E-mini and micro NASDAQ 100, the standard and micro crude oil, and standard and micro gold. Each symbol has its own visual gauge, showing the percentage of NinjaTrader users holding long and short positions. In addition, Pulse displays the average entry prices for aggregated long and short positions. The needle on each gauge also marks the extremes achieved during the trading session. Available on both NinjaTrader web and desktop platforms, this powerful tool allows you to measure market sentiment with data derived from our own customers' trading activity, tracked anonymously to protect trader privacy. Now you have your finger on the pulse of a bit of real-time market sentiment data, giving you unique insights to help make better, more informed trading decisions. Pulse is live now on the NinjaTrader web platform in sim mode and will be coming soon to our desktop platform. Take control of your trading today with Pulse, exclusively on NinjaTrader.
All right, we are back, folks. We during this I don't know, midday update, we're going to have guests every once in a while. And our very first guest, we thought it was appropriate since we've been relying on a software a lot to help us with some trade ideas. And so we're bringing in the CEO and founder of Edgeful. His name is Andre Arslanian, and he's going to correct me if I'm wrong. But he's going to come and show us. He's going to pull up some charts. He's going to show us some setups that he sees based on some of the stats. It's really a feature-rich software. So let's go ahead and welcome Andre aboard. Okay.
Hey, how are you?
Pretty good, man. How are you?
I'm doing great. Thank you for having me. Super excited to be here at the first stream. I've been watching it all morning. It's been fantastic. Great takes that you guys have had, and I'm excited just to see the progression of how the stream starts.
No, it's funny because now our production is much more elaborate than it was, and there's a lot of moving parts, a lot of folks involved, and I expected maybe some more dumpster fires along the way, but no, it was the production folks and everybody that participated did a really awesome job, and
yeah,
we're just glad you're here. So
yeah.
Anyway, where are you located at? Where are you sitting right now?
I'm currently in Miami, Florida. It's warm for me. Yeah, which I'm happy. I know it's not warm for everyone, but I'm happy it is warm for me right now. But yeah, I love it here. I've been here for probably 5 years now. So before everyone wanted to be here for after the pandemic, but yeah, I've been here for a while. I don't really plan on leaving anytime soon.
That's terrific. NinjaTrader Live now is taking over South Florida. We have the studio in Naples. We have Mike Burke, one of the main guys here lives in Miami.
Yeah.
So we have a heavy South Florida presence here. I don't know.
Love
maybe maybe the futures trading business is moving from Chicago to here. I don't know.
Yep. Ken Griffin is making his way down, so we can bring some more people down.
Yeah, that's fantastic.
Yeah.
So tell us a little bit more about yourself, though. So you've been in this business for a very long time. How did you start?
Yeah. So my background is in finance and accounting. I was an analyst at a hedge fund called Weiss Asset Management. Then I was also an analyst at Goldman Sachs for 2.5 years, actually. And I've been interested in finance, in real estate from when I was like as young as I can remember. Real estate was really the first piece, but I transitioned, I think, really in high school to be more interested in finance, trading, like the hedge fund world. And in high school, that's when I started to trade those. I don't know if you guys ever have these like just paper accounts that when you're a kid, you can have it, you buy Apple, you buy whatever, you see how it works. You have $1 million account. It's all, obviously it's like fake money. And then that was my initial introduction into the markets. And then I started trading options actually in 2016 or 2017. And it's just something that I've fallen in love with as a whole. And I've slowly migrated towards options buying and selling. So options buying as in calls and puts. And then I started transitioning into options selling, like vertical spreads, more so on the shorter expiration side. And then now I've actually transitioned into futures, and I still do all the above, but my really core focus is futures based.
Yeah. And so at some point you said, okay, I want to build a platform. I want to build I want to do modeling. I want to build a platform. How did you get to that transition?
So when I really started to take day trading seriously, I have a very analytical background, so my mind always goes to how can I quantify this? Like, what can I look at that gives me something tangible that is not my opinion, that is not my gut feelings or my bias because of what I read or what someone tells me. I need to understand how I can go into any trading day with a legitimate bias, bullish, bearish, but based on data. And when I researched the different strategies, different concepts, the gap fill was something that stood out to me. And very, very simply, gap fill is when price opens either above or below the previous day's close and then retraces to that close. So if it opens above, you can have a bearish bias targeting that previous close. And if it opens below, you have a bullish bias. So pretty much every day you get a bias and you get a target. So to me, I was like, perfect. That sounds great. That's something I'm interested in. It's very simple. Now, obviously, the entry is up to me, but my bias is determined and my target is also determined. And what I noticed as I did more research was everyone just says that these gaps will fill. Just a blanket statement. Yeah, the gaps always fill, which is obviously not the case. You go on YouTube, you go on Instagram, you go on Twitter. Across the board, everyone will say the gaps always fill, which is obviously not the case. And something that I realized was I can't take just someone's word for it. And I actually went and I started buying raw data for every stock that I wanted to trade. And I built an Excel model calculating how often are there gaps up? How often do those gaps up fill? And now I would layer in, I want to see it by weekday. Do different weekdays behave differently? I want to see it by gap size. I want to see it by the time the gap fills. And for anyone who's watching that is familiar with Excel, Excel is not built for that type of analysis where you start to layer variables on top of variables. And I have certifications in Excel. Working in finance, I don't need the mouse. I know all the shortcuts. I'm the typical finance bro that knows all the Excel shortcuts. And it really was something that even for me took hours to figure out how I can do it. And then if I wanted to tweak one thing, it would be another set of 4 or 5 hours, which was obviously a nightmare.
Yeah, you don't look like a geek. You look like a professional F1 driver.
Well, I appreciate that, but yeah, I definitely am on the geekier side, I would say. It's funny you say that. I'm always very numbers oriented, very like spreadsheet oriented, and my friends make fun of me a lot, but it's something that I've managed to balance well, is trying to be a little charismatic and trying to be like extroverted, and then also being very numbers oriented and being very data objective.
Yeah.
And it works well because I can touch on both as the founder, the CEO of a software company that does data analysis. It works well for me because I understand thoroughly the data piece, but I can also, I mean, I like to think that I can explain it in a way that people can actually like resonate and understand, especially to new traders that might not have that data experience, which is obviously a very high barrier of entry for new traders. And what we want to do is lower that barrier of entry for anyone that's new that doesn't have a background at Goldman Sachs or doesn't have a background in any sort of data. And we want to say, here's the information you need. Here's the information that's going to help you determine your bias. That's going to give you the true probabilities. And then you don't need a PhD to understand it.
Got it. That's awesome, man. You're music to my ears. Let's go ahead and pull up some charts. You have a setup maybe brewing right here.
Yes, I do actually. An interesting one.
Yeah, and by the way, one of the things that I do want to mention on the gap, futures traders sometimes forget about the gap because, it's a 23-hour marketplace. And if you just look at a futures chart, there's not a lot of gaps. But if you think about where the equity market closed when New York's bell rang and when it opened again, then that's when those gaps are there. And you're doing a great job of translating that. So let's take a peek.
Yeah, and just so everyone can see on an actual chart here, we're talking about the regular trading hours, so the 4 p.m. close. So what I'm going to do here is I'm going to plot out that 4 p.m. So I'm going to the 3:55 candle and I'm plotting out the close here. And I'm just going to drag this out. And I'm just going to drag this all the way over here. And let me just remove my other lines here. So when you're looking here, and I'm just going to very quickly draw this out, just for anyone who's new that might not really understand what I'm saying or what we're talking about here is right here is the New York session, the current New York session starting at 9:30. And then down here, let me make this a little bit smaller so I can draw out that previous New York session.
And by the way, let me interrupt for 1 second.
Yep.
For the viewers who are unfamiliar with what they're looking at, we've been using the NinjaTrader desktop trading platform. You're using the NinjaTrader web platform.
Yeah. So sorry about that. I do have a Mac, so I do use the web is honestly fantastic as well. Obviously, the desktop is much more thorough, but the web is fantastic as well. But this is the gap that we're referring to. Now, today on ES, the gap was pretty small, but it did fill. So if you want, so in this case, what this means is that price today opened, and I'll make this a little bit bigger here. Price today, and I'll actually draw a line so it's a little bit more clear. Price today opened just below the previous session's close. And a gap fill is when price comes up to touch that previous session's close. So what this means here, and what you can see as I just try to zoom in a little bit, let me make this a little bit bigger. Right over here, you can see that there was a very small gap today. So I'll obviously highlight that it was very small, but it was a few points here on the ES. And this is something that typically if it's a little bit bigger, if it's 10 points or 15 points, and you can catch that move up, that's where you can say, this is a move, this is a bias, and you don't need to catch the whole 15 points either. You can capture 8 points on the ES or whatever it is. If it's 25 points or 30 points on the NQ, that's a fantastic move. That's a great day. There's your day for the most part, right?
Yeah, and then your software lets you actually track the percent of the odds of the percent of a gap fill happening.
Let's look at that quick. So looking at the gap fill report here, and I'll go to the last 6 months. So here we're looking on the left sidebar. We're looking at ES. We're looking at the gap fill report. That's the number 4 right over here. In the last 6 months, and that's from September 17th to Friday. In the New York session, so these boxes that I had plotted out before, right here, these boxes. And then we're looking at, so now let's look at this 1 second. So looking strictly at if price retraces to previous session's close, you have, for every time there was a gap down in the last 6 months, 66% of the time that gap has filled, which means that price has come up to touch that previous session's close. Now, the gaps up are actually a little bit different in the last 6 months, only 59%. Still very solid. Typically, I like to go for something that's 60 or above in terms of trying to entertain a trade, but still solid. But what specifically this is measuring is for price to retrace to that previous session's close. So if I scroll down just quickly, we have this explainer section, and what I'm going to do is I'm going to click on I'll actually use the gap down fill. So in this example here, this would be this previous New York session close. Price opens below right over here, and you can see price rises to that previous session's close right over here. So what we can do on Edgeful is say, if I don't want to capture that entire move and I want to increase my chances here, what we can do is go to this customization number 8 on the left side and change this to be any percentage of the gap. So we actually recently added the ability to go in excess of the gap up to 200%, which would mean that price would have to go double. Or you can go to 50%. So what this would mean is that price only has to touch halfway between the open and the previous close. And I actually want to show you what the stats here are on ES. Just give it a second to load. There's a lot of data
right,
here.
And so now, so by doing this, then you could decide, and correct me if I'm wrong, but you could decide how aggressive or conservative you want to be on the move. In other words, when to say, all right, enough is enough.
Correct. That's such a great point. And in addition to that, you can also say, where can I take some profits in the bias of, if I think the gap is going to fill today, where is a great place to take just a piece off the table or take half of my position off the table and lock in a green or break even trade? It doesn't mean you need to move your stops to break even, but let's have a data-backed target of the halfway point between the open and the previous close to tell you that 78% of the time in the last 6 months, price has reached the halfway point. So now you've increased your odds from 66 to 78. Like the probabilities are significantly higher. And then you look at the gaps up, goes from 59 to 73.
Yeah, that makes perfect sense. Now let's say I don't want to go 6 months back because we had an election, the end of year, we've hit, we're in a new paradigm, maybe not.
Yeah.
And I only wanted to go back, for a shorter period of time. I could do the same analysis, right?
Exactly. So you can actually go up to 5 years back, and you can pick, we have these preset 1 month, 3 months, 6 months, whatever. And then you can also pick certain periods. So if you want to do the last 3 months, you can also do that. And you can see in this case, in the last 3 months, gaps up have been filling more than gaps down. And then you can go in and change your probabilities. You can change it back to a traditional gap fill. And now let's look at the data. Just give it a second to load. Sorry about that.
No worries.
There it is. So 70% of the gaps up have filled in this case. So when you look at the shorter and more recent markets, the data has changed. And what's really nice about this is you're not buying some PDF from last year that's telling you this has happened in whatever, let's just say the second half of 2023. What you're doing is you're getting the most recent data for this market environment, and it updates every day. So you don't actually have to do anything on your end. All you have to do is open it up, and every day it updates. So as the markets shift, the data is going to update as well. And therefore your trading should update as well. For us to adapt to the markets is super important. And that's where Edgeful comes in. So it does it for you.
Yeah, no, that's, and this is just one report of many in the software. It's, I'm literally now at night watching Netflix with Mrs. Caggs, going through different reports, and, I'm missing stuff in, season 3, but it's that feature rich.
Yeah. And one thing that I actually, very specific actually to the recent market environments, one that I want to show you is the opening range breakout. And we're going to be looking at ES here. And if you look at the last 6 months, what this report measures, just so let me intro this a little bit first.
And by the way, we talked a little bit about this morning. I did initial balance breakout, but keep going.
So just for everyone who is not familiar, the opening range breakout is the high and the low of the first 15 minutes of the session. And you can customize this. For the sake of this example, I'm going to focus on the first 15 minutes. And what this report measures is how often does price only break out to the top side of the orb? How often does it only break out to the bottom side, which is this black one right here? And then how often will it break both sides of the orb, right? So in the last 6 months, a single break, which would be a break in a single direction, whether that's the bottom or the top, and a double break is almost 50-50. So to me, I'm not leaning towards one or the other as much. But when you go to the last month on ES, what you can see is that the data has very drastically changed.
Yeah.
And the breakouts has only happened once in the last 20 trading days. So that means that price only breaks to the top side. Now let's look at this today. You can see here is my opening range. So I'll actually just move this down. Price has only broken out to the top side, right? And you can see the highest probability here is the 52, the double break. And if you know that the lowest probability is the breakout, that means that the moment price breaks out to this top side, you can get short targeting a double break because it is the highest probability of the three. Does that make sense?
Total sense, right? Now I do got to throw in a past performance not indicative of future results at that point.
Of course.
But absolutely.
And
it's just...
one thing to add, just in terms of the actual entries, is It does not mean that you get short at the break. It means that this is a bias to develop to use as confluence to enter a trade. By the way, nowhere in Edgeful do we give you a buy or sell signal, and it is not something that we will never do. This is data that you can use to apply to your current trading strategy or something that you're seeing. So in this case, of course, you do not want to just get short at the breakout. This is something where you can use to say, in the last X amount of time, this has happened. Therefore, my bias for the day should be towards the downside. And based on the data, it would not be surprising if price does make it to this IB or to this orb low, which is right over here. Does that make sense?
Totally makes sense. Totally makes sense. And it's really complementary, right? So you're creating a bias within a bias, and then you're looking at your whatever indicators or technicals or levels that you use, whether it's gamma levels or fibs or pivots, whatever it is. I know Anthony's a big fan of Bollinger Bands. It's complementary to that, right? It's not giving you the answer, but it's helping support your trade idea.
Exactly. And there is no, I mean, some people might not like to hear this, but there's no holy grail, right? There's no end all be all solution. What we do here is we give you the information so you can properly frame your mind and your trades according to what's actually happening now. And one thing that I noticed actually, as I was listening to the stream this morning, was that Mondays are typically, like today, obviously today's Monday, there's not really too much going on. And if you look here, I'll go to the last 6 months. What this report measures is the average volume and range by weekday on ES in the New York session. And now what do we see? Average volume is the lowest of any weekday on a Monday. So as a trader, coming into that day, saying, I understand that typically the volume will be lowest today, which means that you need to adjust your trading style. Maybe perhaps your position size, perhaps where your targets are, perhaps where your stop loss is, or the type of price action you're expecting. If you're expecting very smooth, continuous price action on a day with low volume, you're probably not really aligned with what's going to happen on the day. Because typically, as you can see, the data shows that as the volume decreases, there is a correlation with the range. So a day like today,
that's startling to me, by the way. That chart you just had. I mean, that is startling. I've never thought to think about that. I think in terms of, is it a news day? Is it not a news day? Is it a holiday? Is it not a holiday? But now that you have this like statistical look back and say this is a reality, it's shocking.
Yeah, and the example that almost every single report on Edgeful has the ability to filter by weekday. And one thing that is universal across almost every single report is that each weekday behaves differently. And one thing that I've noticed is a lot of people, let's say you only trade ES. You come into the markets every day and you expect ES to behave the same every day because it's the only ticker that you trade. In reality, that could not be further from the truth because there are different volume environments, there are different range environments, different reports have different results based on the weekdays. Mm-hmm. And the example that I like to make is, and the comparison, like really the analogy that I like to make for any of the reports, including this one, is relating to the weather. Where for the people who have seasons, luckily in Miami, I don't have seasons. But for those who have seasons, maybe you live in Chicago, maybe you live somewhere in the Northeast or wherever else, anywhere with seasons. If you wear a t-shirt and shorts in the summer, that's going to work well for you. Obviously, you're aligned with the weather. You're aligned with the conditions. And because that works, you want to maintain that t-shirt and shorts into the winter time, into December. That is no longer going to work for you. You are no longer adapting to the weather conditions. You need to put on your jacket and your pants when the weather changes, right? The same goes for trading. As we progress throughout the week, you can't wear your t-shirt and shorts every day because the weather's going to change. It's up to us as the traders to understand when the weather changes and for us to adapt to that weather the exact same way that we do with the actual weather. Or sorry, to the markets the same way we do with the weather.
Yeah, no, that's a great analogy for sure.
Yeah.
Just wanted to address a couple of comments in the chat.
Yeah.
You referred to orb as a 15-minute time frame. You in your software, people define opening ranges and initial balances differently.
Yep.
Sometimes different segments of time, sometimes different time frames in different markets.
Yeah.
But you could easily set that to 30-minute if you wanted, right?
Easily. So every single report has the ability to be customized. So on the left side here, number 8, this is where you can customize any report regardless of what it is. That's how I changed the gap fill percentage from 100% to 50%. But here, if I click on that, we have a bunch of customizations for this report specifically. The one that we're going to be looking at here is the orb time frame. This changes the time frame of the candles used, so you can see opening range, and this is the time that we're looking at, 9:30 to 9:45. If I change this to be 30 minutes, it is going to change from 9 to 10. And then now, let's look at the data here. You can see that the double break is a little less likely in this case. And that's totally fine. There is no right answer. There's no right combination. It's just about what you like to trade and what applies to you and how you can really push and move the data around for it to suit your trading style with an acceptable threshold of a percentage that you want to trade.
Yeah. And I think, we talked about this last time we did kind of like a podcast, right? A couple of weeks ago.
That was great.
And we talked about the opening range breakout, the 30-minute opening range breakout trade not working as much anymore as it used to. And we expanded that idea to the first hour, or what I would call the initial balance, where then you did have that trade kind of kicking in a little more. Is that kind of what you're seeing?
100%. So just in terms of what I want to show how drastic some of these changes are, and I'll go to the 15-minute just because I know the data is so drastic. So as a trader, you might think that maybe this is going to increase or fluctuate maybe 5% over the course of a year. But in reality, if we went to Q1 of 2024 and you looked at this orb report on ES, what you would see, and just give it a second to load, what you would see is something very different from what you would see. Sorry, it's just taking a second here.
That's right. Take your time. The wonders of the internet.
Yeah, right. The wonders of crunching data. Yeah. And either way, in this case, the this double break seems to be in play at the moment. Let me just refresh this 1 second. I want to go to the first quarter of 2021. There it is. Okay. So the double break in Q1 of 2021 happened over 80% of the time. So in terms of how to execute on that as an idea is waiting for one side to break, going into a level of supply, going into a level of resistance, or finding some sort of short signal, and then taking the move back down to the orb low, expecting both sides of the orb to break on that in that session. Now, this is Q1 2024. If you go in the same year, Q4 of 2024, let me just actually do that. Q4 of the same year, it cuts nearly in half from 80% to 50%. So just to touch on what you were saying is that the orb, and what we were talking about was that the orb doesn't really work as well anymore. This isn't a perfect example of how drastically the data can change, even in the same year. But what I'd love to do now is go to the initial balance, which is the one that we had mentioned, which is the first hour. And if we look here, and let's go to the last 6 months, And again, we're looking at ES, we're looking at the IB report in the last 6 months, and we're looking exclusively at that New York session, which is from 9:30 to 4 p.m. Eastern time. And what you can see here on the ES is that 76% of the time in the last 6 months, price has only broken out to one side of the initial balance. And I just want to show you what that looks like on a chart. That is, here's your initial balance right here, right there. And let me plot out up until 10:30. So this blue box here is the initial balance. And in the last 6 months, price has only broken out to one side throughout the day. 22% of the time, it will break both sides. And 2 out of 125 days has it not broken either. And if we look today, it has not broken either yet. The high is right here. The low is right here. So based on the data, we want to expect one side to break. Obviously, we don't know which side that is, but because over 98% of the time in the last 6 months, price has broken either one or both sides, you want to expect one side to break here. And obviously, find your own bias, find your own trade entry and everything else. But considering we are closer to the bottom here, and it is very unlikely for that orb to remain a breakout day, it would make sense, based on what the data shows, for price to eventually make its way down to at least tag this IB low.
Yeah. So Andre, we have about 5 minutes left.
Yeah.
Could you talk to the power hour reports a little bit?
For sure. So let's go to the power hour breakout report right over here. I'll actually go to my bookmarks because I know I have it bookmarked. Power hour breakout. And this is something that I like to use when I'm trading that last hour. So for some context, power hour is the last hour of the session. If you're trading the New York session, that's from 3 to 4 p.m. Eastern time. So what this report looks at, and I'll actually scroll down so we can get a little visual here. What this report looks at is how often is there a new high of day or a new low of day made in that last hour. So right over here, you can see, like, if this blue box is from 9:30 to 3 p.m. and this yellow box is the actual power hour itself, how often does price make a new high, just make a new high during this last hour, or make a new low? Now, what you hear about the actual name of power hour is that it sounds like it's very crazy and that it's very chaotic and that there is going to be a lot going on. But what the data shows is that 81% of the time in the last 6 months, a new low of day was not made, and 72% of the time, a new high of day was not made, which means that price has stayed within that range that price has made from 9:30 to 3 p.m. And I'll show you an example here, just because it's not 3 p.m. right now. This is an example where after 3 p.m., a new low of day is made. So people who like to trade power hour, what do you need to know? You need to understand that in the last 6 months, it is unlikely that price is going to break out of the current day's range, which means there's 2 ways really to take advantage of this. One is, if you are long towards a new high of day, you might want to take the majority of your position off, not expecting price to break that high of day, or at least reverse back on you. So lock in your profits before the new high of day, because obviously it's unlikely for that to happen. The same thing goes for the downside. If you're short as price comes down into the current low of day, you want to take your profits before that. Now, there's not a 0 chance. Obviously, any trade, any day, it could happen.
Yeah.
And even though this 82, rounding to 82%, is very high, by definition, that means that 18% of the time, it does happen. So don't be very mindful about the risk, because these days could be, you don't know the sequence of when this plays out. Were you going to say something?
Yeah, no, but I mean, this is particularly good. When you have a trend day, either up or down, doesn't matter, and you're at the end of the day.
Yeah.
A lot of folks think in terms of, well, profit takers are going to come back in and this is going to reverse, or I want to get long here. Can't go any lower. And
Yeah.
this is a case where, well, let's go to get some stats on this before
Yeah.
we come up with these trade ideas, which are bad trade ideas usually.
Yeah, exactly. And this is really the most powerful piece, is just having that confidence to be able to say, I don't want to set my targets here because I know in the last 6 months, price has not actually gotten there X% of the time. That confidence to even say, I know that price, in terms of the gap fill, in the last 6 months, price has done this, which gives me the confidence to sit in a trade that might be consolidating a little bit longer than I like, or might not be going exactly in my favor as soon as I enter. But I know overall the structure and the probabilities around the concept that I'm looking at, which helps me in my bias to stick to my winners and to cut my losers when they should be cut. Does that make sense?
No, yeah, totally.
Yeah.
So, yeah, no. So I appreciate you walking us through that,
Of
and
course.
hopefully, as time goes by, we'll be able to get you back on
Yeah.
to describe some of the other. And there's so many different reports and permutations here
Yeah.
to get you back on to kind of guide us through it and how to use it. Best
Of course.
practices and all that stuff. And
Absolutely.
I just love it. It's a fantastic tool. So. Thanks for being here.
Of course.
The website's Edgeful, but with one L at the end, right?
Yes, correct.
Edgeful.com. You can go there, you can check it out, and get involved with it. I think it's well worth it.
Yeah. Thank you. Yeah, it's been a pleasure talking to you as always, of course, but it's been a pleasure talking to you. So I appreciate you having me. Hopefully we can do this again soon, but yeah, appreciate it.
Very awesome.
Time flies.
All right, Andre, I will see you soon.
All right.
I'm going to take the screen over now. Thanks again. All right, so we have a few minutes left. We're going to do a little bit of a midday type of wrap up right here. Let me get my bearing straight on my screen. First day of NinjaTrader Live. I'll call it 2.0. I don't know if it's 2.0. I think it was pretty good. We had some, how about Farm? How cool is that guy? I mean, I didn't know him before. Well, today. Fantastic. And of course, the team here at NinjaTrader, along with Tanya and everybody else. We're going to go till 12 o'clock today. So I don't know, what's that? Maybe 7 or 8 more minutes. Then we're going to take a break and come back in the afternoon, and I'll talk about that in a second. So let's just kind of go back to the E-mini S&P just to kind of level set where we're at here. And I'm just going to pull up a 30-minute chart. I know people are like, wait, where's your 10-minute chart, Jim? I'm going to do a 30-minute chart. I'm evolving in my capacity as a trader. So this is a 30-minute candle right here. And, we have those white lines at the top. Again, those white lines represent that kind of first hour, what I'll call initial balance. And you can see we have no breaks, right? Remember, the stat today is 8.3% chance of no breaks. So now I'm thinking about this in terms of the rest of the day. And while I expect a break, right? And so now I'm looking at my bias, like, do I expect a break to the upside or to the downside? Couple areas to consider. We have the JAX 1 level up here at 56.75. Remember, I'm in the March contract, and you can see the volume in the March and the June on my market analyzer on the left-hand side about the same now. They're almost 50-50, right? They're coming up to the finish line. And by the way, Andre finished P1 in today's F1 race. So I got to thank Andre for that. So, we have R1 up here, R1 held, JAX 1 held. We kind of had a really nice retracement back down so far on this after this initial drive up. We're right at that 38.1% textbook retracement. The volume profile is not great. It's a little wonky, and you could say it's biased to the upside. We have a point of control right now, a little bit north of that, pretty close to 56.60. But the other thing we have is a lower low, a lower low, a lower low, a series of lower highs. I just said that backward. I know that. But so this is looking a little bit more bearish right now as I think about this. So when I'm thinking about, and we'll look at this as we get closer to the end of the day, and thinking in terms of, are we going to break out? Are we going to fall in that 8.33% chance we're sticking in the middle? I don't know, but we'll find out. So there's plenty of room on the downside. If you go all the way to the downside, you have an important pivot support level at 5,600 even, which isn't surprising. That's a nice even level. And then you have JAX 2, you have gamma level 2 at 5650, right where we're at right now. So it could be that this is price happiness for the day. Who knows? The last thing I wanted to point out about this particular look is we've only, our high to low range is only 75 handles today. And usually we're going to have, well, let's look at my market analyzer. My 14-day ATR is 106. So be leery of a breakout and some velocity one way or the other. Maybe what's balancing that is maybe some anticipation going into a Fed meeting on Wednesday. Hopefully it's a no drama Fed meeting. Who knows? But that's and then of course unplanned news, right? Who else are we getting a tariff? Sorry, that was a bad joke. Anyway, that's kind of the story of the equity markets, kind of unchanged, sitting around. The Dow kind of picked up, like the Dow's up 200. The Dow is, I think last week was the worst week since, I don't know, May 2023 or something for the Dow. So that's actually up a half a percent, which is good to see. Equal weight futures, that's at EWF. This is a contract that was recently launched at the CME Group. It's starting to get a little volume in it. There's not that much volume, but there's market makers and there's pricing. And that's the S&P where the components aren't weighted, right? It's equal weight and it's up 70, right? It's up 70. I like to compare that to the, how many, what's the percent difference? Percent's better than points. 1%, it's up 1% equal weight futures. Even the S&P's own, the S&P weighted is only up 0.21. And that tells me that, these smaller boats, right? These smaller boats are floating a little higher, right? So it's not, a Mag 7 situation that's dominant today. It's not, you could argue the opposite. So I like to keep my eye on that to think, all right, is this a real rally in the S&P or not? Or are there 3, 4, or 5 large contributors that are causing some skew in the number? So that's something else to think about going into Power Hour at the end of the day. Let's kind of move off of this particular market. I want to go down to the 10-year, we'll go to the 30-year bonds. So interestingly enough, all of the treasuries now are green. Earlier this morning, thank you for that, Kevin. Earlier this morning, the long end of the curve was green. The short end of the curve was red. Not the case anymore. I'm going to click on the 30-year treasury bonds right now, and you can see we're just driving up higher and higher right now. JAX 1, we just crossed it at 117 in 1630 seconds. We whipped to that daily max, this 1-day max area. Now, I've been looking at these Menthor Q levels on intraday chart. These are gamma levels, and there's blind spots. There's all sorts of stuff that the software comes with. And in the bonds anyway, you get a lot of this. You get a couple things. You get a lot of tags to pivots. We just tagged the R2 and kind of dropped off a couple ticks. And also the 1-day daily max. I came to this market for you, Kevin, on purpose. Anyway, this is looking pretty strong here. And you would consider this an opening range breakout or a breakout. I don't have the stats with me on the edge view, but we have broken through to the upside. So interesting. I do expect maybe the bonds to continue upward a little bit over the next couple of days, but we'll see. All right. Well, a great morning, great start to the day. Congratulations to everybody behind the scenes. You guys did a great job. Of course, Deli and crew, fantastic. Shai, great to be working with you. So we're going to end up coming back. We're going to take a break. So at 12 to 2:30, we're off, right? 2:30, we're going to come back on. We'll do another edge report, couple new edge reports. We're going to have Order Flow Labs. Leo from Order Flow Labs, you're going to love Leo. He's going to be coming on and looking for live trades here on the close as well. And that's going to be at 2:30 East Coast time. Kaz, I see you in the chat. Thanks for being patient, brother. Thanks for being here with us. And appreciate everybody participating in the chat and being supportive of each other, because this is not an easy proposition. Futures trading is not easy. It's difficult. It takes effort. It takes a community. There's Leo in the chat right now. Cannot wait. So having said all that, folks, thanks for being here. Day one. Appreciate you. We are signing off for a little bit. We will be back soon.